But GM says so far the UAW strike has hurt its bottom line by about $800 million. This is where we start to see the impact, right? And they're estimating that it's draining about $200 million a week from its bottom line right now. So going forward, we can see that number happen. Either it stays the same or maybe even gets larger, perhaps as strikes continue to broaden out, if they continue to do that.
Boy, I have a hard time seeing how the market is going to give them the benefit of the doubt here, you know, because even though they beat, still down. The profit from a year ago, and then income down, it's 7.5% or you know, high single digits, like you said, and then they remove the outlook too. It's like, in this economy, you can't not have an outlook. I mean, I get it's understandable, you know, like, again, but it's just, why would anybody go and then chase a stock that has no view of the future when they're being so diligent about picking companies with the best view of the future?
And their outlook was going to be a double-edged sword anyway.
Exactly.
If it was bullish, then the companies or the UAW, they would have claimed that, hey, listen, you have the money to raise the rates or raise these employees' salaries. You've got the money to add more concessions. But if it was a bearish outlook, then Wall Street would have punished them for it. You know? So
no, I think that's very fair.
Yeah.
That's a good analysis. All right, so no guidance, no bounce. That's how it works. No guidance, no rally. Thanks, Renita. Appreciate it. General Electric, however, different story there. All right, some earnings to get a little taste of what's to come. We'll return to that subject after the bell. When we come back, taking us to the opening session is Troy Gajewski. Always a fantastic conversation for those in the mindset for alternatives, but also just those looking for a hot macro take. Stick around.
I remember when I first started flying and we would experience turbulence, I would watch the flight attendants. If they're not nervous, then I'm not going to be nervous. Financially, I'm the flight attendant in that situation.
Good morning. It is October 24th. Welcome. Hope you had a good morning and a good evening. We're going to be streaming the stock market today. Be watching the SPY, doing some day trades on there with options. I'll be looking at GME, AMC, GNS, whatever has volume, volatility. Looks exciting to trade. Thanks for being here. Sub up, like up, comment down. Happy Money sticks around. Follow us on Twitter at HappyMoneyYT. And we have a Discord server. I think for those are both in the description. Put a Discord link in chat as well. SHF, good morning. No more moon. No moon. Thanks guys for your likes. Well done. 7 thumbs up pre-market. Thank you, all 7 of you. Today, waiting for the big moves for big positions. I got a little caught up yesterday. Excited. Monday. Had nice gains in the morning. Squandered them. So I'm gonna go slow today after maybe the morning trade. Just take it easy. Actually made perfect sense yesterday. That wouldn't have even happened. Just went to the low. Yeah, yesterday you need to be in a timeout for a lot of the midday for that chop. And we had this head and shoulders. By that point, emotionally, I think I was just too exhausted, and so I didn't have conviction to hold, but what's I got here would have been nice for the end of day trade. But other than that, there weren't a whole lot of trades after the morning. So remember that. Let's get those midday trades. Even a break on this channel, like, it's not even good for the puts there. You have another little head and shoulders here, but it's just still choppy for the next hour. Especially trading 0 days coming into end of day, it's just this theta burn will kill you. So potentially trading tomorrow's contracts midday. Don't know, we'll see. And there's the bell. We're off to the races. SPY is opening up 0.5% up. We do have divergence here on RSI. If SPY can stay, if this RSI can stay this high today, not come lower than yesterday's, we'll have an RSI divergence, and a SPY will be probably going to rally a bit. I'd say to this high at least, or potentially top of this channel. Or if we get a proper Santa rally, maybe back to the gap fill up there, 453 and beyond. AMC is up 2.5%. Got GME up 1.5%. Like Wisa's opening up strong. Evital, Coinbase still on a. Well, yeah, crypto's going kind of crazy. Crypto has been going crazy. 35,000 almost on Bitcoin. So trying to figure out if crypto is a safe haven asset or risk on, which they were talking about yesterday, and it's Interesting. It could possibly be transitioning into a value type safe haven, opposed to risk on. Something interesting to ponder. GME still bear flagging on its way down. See what happens when we get up to this resistance. If it's going to make a little higher resistance touch. Or what? Let's see. Generac up 1.7, got Run up 1.8, C 1.2, JetBlue up 0.78. GME up 2, SPY up 0.65. There's a retest of pre-market high, busting through that. Good morning, Bubba. Just comes in and says, "Good morning, Guts." Morning, Guts. Also, a sparkling mango passion fruit. Like a early morning energy drink. Got Redfin hopping 9%. Still a lot of earnings coming up. SPY rallying, breaking yesterday's high, or pre-market high. Yesterday's high 424.45. All of my buying power is now available. Could be a good thing or a bad thing. But hopefully pace myself to just make the trades on the TD account. .6 on GME. Back down to WAP. AMC 1.6. Mara 14%. I thought Mara was kind of the lagger. All the other crypto ones were moving and Mara hadn't really done much. Maybe it did, I just didn't notice. Yeah, I guess yesterday was pretty big on Mara. Logi's up 11%. Redfin. High bull flagging. Yeah, 4%. Base is up 4%. A little risk on there. Or risk off, rather. Risk on. I always flip it around. Level big lots up, Peloton up. Wayfair. Fisker, Plug Power, Upstart. All the sketchy ones. Even Nikola rallying up 19%. Actually held pretty high levels. Flattened out. Interesting. A lot of earnings on these. 3% on GME. Yeah, this first kind of steeper resistance that was set off 928 about a month ago. Not sure if that one will hold. AMC up 3.7. Oh, Smile Direct went OTC. Oh my goodness. Didn't even notice. Happened at the beginning of the month. Wow. It got to you too, huh, SDC? Come on, wake up, browser. There's a little test on VWAP. A's is down, Express is down, Rite Aid's down. Coinbase 12.5, Nikola 19. $3.8 on GME. Redfin 11.5. 12.5 on coin, 13 on coin. Mara 17 a quarter. Verizon, they have earnings? Yeah. 6.5% on Verizon, that's a big move. Let's buy back to VWAP. What was it? Internet customers up 69,000 or 69,000. Yeah, I talked to Verizon about their internet. Seems pretty interesting. EPS beats 1.22 versus the 1.11 estimate. Sales 33 billion versus 31 estimate. So beat on sales and yes. That is neat. 4% on GameStop. Or in a order on AMC. Fubo's up. GNS is up 1.15. Sorry, that was me. Oh, I updated Windows last night. Wondering if it would help my browser a little bit. Forced update. Lag everything until update. Oh, a little scalp. Little morning put scalp on, Bubba. Alright. Below VWAP. The VWAP chop. Give me up 4%. Touched $14. AMC 4.5. $9.5. SPY doing the VWAP chop. But again. Newegg, Boo2, Roblox, Square, Art, all these. These are green. There's a little fleshy on SPY. Let's see what we've got going on here. Services PMI, that's what that was. Manufacturing PMI, services PMI just came out, 945. We make a little inverse cup here. Below the day test. Gap to fill down there as well. There's low of the day right there, so if you get a little handle now. Oh. It's a little jumpy after that data. Be setting up for a choppy day. Remind myself of that. Always just a possibility. Won't have to trade. Beautiful setup there. Mm-hmm. 5% on AMC, 4% on GME, SPY bouncing back up to BWAP. A little jumpy from that data. Half on GME. Detect 12% at earnings. So, yeah. Beat on EPS, beat on sales. I got some puts there. Not the best entry. The VWAP would have been better, of course, but you know. If you get this gap filled out of the way. Aloha Maui. candles, big wicks. Back up to VWAP. There's a little VWAP test. % on GME. First little resistance there on GME. For 424.50 on top. Good, you got a plan. Just see a little inverse cup and handle here potentially forming. Go back to the top side, then grab calls, but let's see here. Just had a bad entry. Thought this could have been the handle right here on that little VWAP test. See here. This should have been my entry right here. Did break it. Let's see, this candle closes. I'm out of those. Dang it. Add first trade. This is where I'd take calls in that break. But I'm not prepared because I'm trying to get out of those puts. Garbage truck woke up 9-month-old baby. Face the wrath. Morning, kitty. Cat spread, where did it go to your brain? I don't know if I need that. There's a little double top. GME's coming down there. It's up 2.9. See, up 3.9. Buy at the high of day. String chop, yeah, a little bit. Establishing a range here for sure. I'll have a gap down there. I'll wait for Bop. There's the VWAP break. I'll pull back on this candle. Okay, I'm in puts again. Trying to wait for the candle to close. I need those reversal candles. Close 20% at low of the day. Very choppy. If we have any kind of continuation this morning. 30 minutes from open. Here's the chop. Line back up to VWAP. Little M pattern. Mm-hmm. Or Houston Astros fan base. Oh my gosh. Breaking that out. I don't have a link to the court. Is it going on right now? Barbecue court? Guess this was a low of the day test? I don't know. Them patterns are pretty bearish though. If we are indeed forming that. Back to dip. Back bounced on here though is buy back above VWAP. Mm-hmm. Are we still in this range or we break? Breaking. Closing. False break.
the lack of exposure when it comes to amount balances, credit balances, things of that nature.
Yeah. Okay. The growth, though, for revenue, I mean, we're talking, what, 10%? So I guess that's not bad. You know, it's not like a big growth engine necessarily, but that's more than I thought it would be from my own kind of view of the company. It's sort of a static macro swiping play. Because my point is that if that's all there is to it, I mean, we've been getting data point after data point, and Visa's been rallying with it. I'm trying to figure out, like, what the surprise would be. You know, like a Microsoft or a Tesla or, you know, a lot of companies can surprise us. And if you're such a pure macro play like a Visa, where is the surprise from? Some of those kind of fringe sort of efforts they have that you mentioned?
The surprise is going to be the international portion of their business. So here in the United States, the market is actually expecting their operations to grow about 8.2%, but the international side of the business is supposed to be up mid double digits. And so I think that could be the surprise. If we see something that's maybe in the low 20s or maybe the high teens, I think that could be that driver to the upside here moving forward. Also, just to note from a technical standpoint, if you're looking at a 1-year daily chart here, the 200-day SMA or the simple moving average is a very key level that Visa has been able to bounce off of several times over the last year. So that's a very key area. Right now, it's sitting at $231.39. The stock's trading right above that right now. So you can have this fundamental setup of once again, kind of touching that 200-day moving average. If you have some good news, that could also bring buyers coming back in. You want to continue to keep that channel in check. It's trading at the lower end of the channel. So from a bull standpoint, you can make a case that the stock can break to the upside here. But if we do see a significant miss, or if guidance or commentary does come in fairly light, then that drop to the downside could actually be very significant. And the support there could be another, $20, $25 to the downside there. So I think that's going to be the biggest risk for bulls from a technical standpoint. And then also, once again, from what we have heard from other channel checks, like, airlines and things of that nature, it does appear that they are actually set up to be, to provide some pretty decent earnings here. And we're going to actually probably have them after the close here, and we'll actually discuss it. But I think that they're more set up for the upside move rather than a downside move at this point.
Okay, and it does seem like as far as like the macro potential for surprise goes, there is more potential for surprise on the international economic situation than here, where it's easier to figure out right now, as Kevin and I were just walking through. The international picture, more mixed, more still in the throes of recovery. And so the momentum of that recovery, the thrust of it could be the surprise. So I like that point. And it shows up with the bigger growth expectations in that part of the business. So nice setup. Thanks, Kevin Grain, for the details ahead of the report. Let's get Tim Bigeman on the case. He's lead option strategist at Delta Derivatives. Tim, what do you think? Been a pretty good year for Visa. Are they going to continue that?
I am probably guardedly bullish on this name as well, simply because of more of a short-term technical picture. It did come down to that 230, which is major support. It's been down here several times and bounced here. You guys just talked about the 200-day, moving average right above that number as well. We're also seeing, the fact that this stock has actually beaten earnings with a pretty good deal of, vigor over the past 3 quarters, yet the stock is virtually in the same place here. So valuation multiples have come down here. You guys also talked about the fact it's a little more inoculated on a business model standpoint than some of the other, big credit card companies. So overall, I kind of like it just for a short-term sort of bounce here. Plus the fact that we're looking at, this week's options with earnings in them, trading at a mid-40 IV, and then the November traditionals that I'm using to hedge with, trading at half that IV at below 25. So capturing a huge term structure vol edge as well. So I'm just going out buying the traditional November 245 calls, selling this week's 245 calls out of the money here, paying a little bit over $1 for it. I like the fact that it's, cheap to begin with on a $230+ stock. To pay $1 for an option trade is comparatively cheap. Plus, I have the weeklies to continue to, what I call chop wood in case the stock flounders around here, bring in more premium. So I kind of, am guardedly bullish here. We're looking as, about a, 4% market maker move, which would put it right near the upper boundary of that, range where my short and long call strikes are at.
Okay. Yeah, interesting approach. So you're generally betting that the trend is going to hold, that this channel we've been in, that we are kind of on the lower end of right now, is going to maintain, and you're going to give it some time too. So you can kind of fade some of the immediate action around the report and then have your longer dated call to hang on to for a couple weeks.
Yeah, exactly right. I'm not looking for, fireworks to the upside by any stretch, but also at the same time, given the stock kind of pulled back over the past week or so, not really looking for a complete collapse either. So this is as much that vol capture trade, capturing a huge implied volatility differential, which makes our net debit obviously smaller here. So yeah, really looking for Visa to just bounce around, anywhere between 230 and 240, where it's kind of been stuck for a while. Will certainly do fine on this trade. Even if the stock doesn't react at all, this spread will probably widen out just as a function of vol flattening out as well.
All right. Thanks for the trade, Tim Bingham. Nice one going into Visa. Break-evens between 231 and 265. So range-bound trade with some time on it. When we come back, let's talk some ETFs at BlackRock. But hold on. Got a different focus. Not the one you're thinking about, but a pretty interesting new suite that targets retirement in particular.
market is so much more important than trying to time the market. And so we really feel that it's important that those investors with long-term time horizons get invested in the market today.
So you guys are really even targeting kind of the younger end of folks thinking about the long term. This isn't like catch the, back 20 years of my investment path. This is like something that can be an asset from the beginning.
Absolutely. It's actually designed for individuals no matter where they are in the retirement journey. As an investor, it's as simple as selecting the fund that most closely aligns with your target retirement date. You start making contributions and the rest is done for you. You can think about these products, they, as I mentioned, evolve along with you along the retirement journey. Really 3 phases of the retirement investing life cycle that you can think about: grow, protect, spend. When you're early on in your investing life cycle, like I said, you want to be getting that access to growth. And so the portfolio that we have consists of nearly 99% broad and diverse.
GME up 2.8, AMC breaking out there, 6.5, double bottom. It's like here you're saying, maybe. Chopping around, new high day there though. I got into puts on the break of VWAP, closed them, back into calls, so trying to change my rhythm, get in rhythm with the market here, not get whipsawed anymore. Little breakout on SPY. Closing a little bit here. I've already taken some profit here. I'll take a little bit more. Chop me back into the morning L zone. Mm-hmm. 100. stop. Sorry. Gone. Market's been open for an hour. Ugly first hour. Close another one up there. % on AMC. %. GME just below VWAP.
Bottom line's also getting hurt. Same story, right? Down quarter over quarter.
Yeah. Actually, the bottom line, pardon me, I'm so sorry, it's up from last quarter.
Okay.
The 19.35 billion is up from last quarter for revenue. But analysts say that the company's low price service plan strategy to attract customers and remain competitive, that'll likely impact profits in a way. And that's along with other promotional activities. It's trying to keep its customers that it already has and draw in new ones, but it'll come at a cost to the company as well. Now, on the upside, T-Mobile had collaborated with Pixel Health to deploy a 5G hybrid network at Boston Children's Hospital. This is the first of its kind implemented within the healthcare industry. So we can look forward to hearing some positive things about that, but whether or not the success of that was enough to offset some of these competitive concerns remains to be known.
It's interesting that the analysts talking about the competitive concerns, the kind of price of getting those customers, because I mean they have been doing quite well compared to AT&T, Verizon, but at a cost. So I guess I can get that argument that like, all right, how much is it worth? And that initial combination, T-Mobile and Sprint, how do you take that and run with it now, which gave them that leg up? Shares,
about to get stopped out on the rest here.
Slowing down a little bit. I mean, they did have a pretty nice run.
Yeah, but overall, we haven't really moved too much at all on both a 52-week and a year-to-date basis here. So the thing that strikes me the most about our T-Mobile chart today is that it's very triangular here.
This is fun.
Yeah, we have one trend line going across the highs, starting at those yearly highs, a competing trend line starting with the yearly lows, converging toward each other. So This speaks to several things here. The main thing is that the trend is slowing down, kind of moving sideways here. You know, it's giving us an increasingly compressed area to look for our price movements to move within these boundaries here. Look at our moving averages as well. All three of our moving averages practically right on top of each other, trending sideways for the most part. Further speaks to our lack of strong directionality in this name. Look at our RSI as well, kind of the same picture. Another triangular shape here, a series of lower highs and higher lows converging toward each other. We are above that 50 midline right now. We're also above our moving averages that we follow. So things maybe have a slight bullish lean right now. But, you know, this might be, on one hand, you could view it as kind of boring because we aren't really getting big moves, no big breakouts or anything, you know, kind of just in a increasingly smaller range.
Might be tapering a little bit.
But on the other hand, that's usually the recipe for
this high didn't
an
hit it unless we can
breakout.
break here.
You know, low volatility is often the precursor to high volatility. So if I were a trader, I'd be really excited for a potential move beyond either of those trend lines because the reaction could be energetic here. So the levels to watch. 142.84 was our high point from right here. We didn't spend too much time above that point. So maybe around 144 or so would be where we might get our breakout from that level. We've got quite an important pivot point here. We've got our two longer term moving averages, orange 63-day, purple 252-day, right around the 140 level or 138 level or so. So if we fall below that point, next point to watch, our old lows near about 135 matches up pretty cleanly with where we would find our trend line to be. So those would be the areas I'd be looking at.
Kind of equidistant from where we are, and the moving average really shows how flattened this has gotten. I mean, back to the 1 year, we're all exactly like unchanged on the year, right?
Yeah, almost exactly unchanged.
Yeah, less than a % move. So it really is like getting totally streamlined.
Like a further pullback.
It's kind of convenient for traders because you've got still a good bit of movement even within this triangle before you break out from it. So,
test on the high there.
One step at a time here. T-Mobile will see if it moves to either end of the triangle, and then from there, does it actually break out? All right, interesting chart. T-Mobile definitely slowed down a little bit from a pretty strong start. Still firm on the year. Let's talk Snap, Ernita. I don't think firm is the word I would use to describe this stock really ever the last like 5 years.
Not a good thing to, you know, here's the thing. Snapchat, that was totally involuntary, by the way. It has not seen the same kind of recovery that its larger social media peers have seen over the past year or so. And the company had 2 consecutive quarters of revenue declines, but this quarter will show if conditions have improved in some way. We're looking at earnings. Well, the company will expect an adjusted loss of 4 cents, down year over year, down sequentially, revenue of $1.11 billion. That is also down year over year. Now, we'll be looking to see how daily active users have fared. FactSet had projected that Snap would have about 400 and, well, you know what? We will get back to that number, but the company previously said guidance had assumed 406 million daily active users at the high end. And FactSet had projected around 406 million daily active users as well. Now, we'll also look for domestic downloads as well as international adoption. We'll see that domestic downloads, analysts expect that to continue to drop. They expect international adoption to continue to be challenged. Shares are still up, though, year to date by around, more than 10% year to date. So we'll find out if the company will continue on this trajectory higher, but we'll have to look at these earnings and see. They don't look too pretty, though, so far.
Yeah, I mean, nothing good in the expectations. I mean, I didn't hear one positive thing in there about what analysts are saying. And here's the thing, is that we're up on the year, but, you know, apart from literally like 1 day here, like the first day of the year, Rick, this stock would basically be unchanged.
Yeah, but things, to me, looked like they were improving a little bit recently. The first thing I would call attention to is that we have 2 possible trend lines to be looking at here for our downside trend lines here. And really, this is kind of subjective. It depends on your point of view as a technician, how you might draw these. The first choice would be off the highs near 1389, this blue dashed line here, which connected with these highs then. We've broken through that one a while ago here. The second choice would be our post-earnings gap highs, this green dashed trend line here, where we connected once again with those same highs. We're breaking above that one as well. So I think that the 2 main ways you could look at this chart, we're moving to the upside in terms of our trend lines here. Our moving averages, our yellow 21-day, you can see that price has surpassed it. We've also moved beyond our orange 63-day EMA to the upside. Our yellow 21-day is starting to trend upward here. So we have a situation where we're breaking above our trend lines, our moving averages are starting to trend upward, and we are seeing a little bit of gains on the day here. RSI, maybe not the most positive thing here, but we are still making a marginally higher high over our previous peak. It's really tough to see here. We are a little bit higher than it, but kind of flat, really. What we would really want to see would be a strong move above our old highs here, which would match our higher closing price above our previous peak.
Chopping up here
at
the highs.
Bullish. It's still above that 50 midline. We are still trending upward
Looking for puts here.
Long term, not so great. Moving average here, purple 250 2-day, was
like
far
coming out of the sky. That's how far
Exactly,
the snap has
yeah.
fallen. The 200 DMA barely makes it into the one-year chart.
That's why I don't want to get too excited about these kind of maybe green shoots that we're seeing here, because the long-term picture for this name is still not very good. You guys had quite a bit to say about the outlook for earnings as well here. So some points of support and resistance, I would say probably around here between our volume profile point of control and our old highs, between about 1025 to 1046 would be a potential resistance area. That seems like a notable spot. And then we've got these highs as well. That was our high point after we had our last earnings gap near 1136 or so. To the downside, we've got our moving averages, and then we've got this white uptrend line here. You can see that would be the point to be looking for some further losses here. Then we've got our old lows near 834. So really, earnings could really change things in this name, but for the short term at least, things are looking a little more positive.
All right, so decent little short-term momentum here. Snap needs to see some follow through, maybe breach that heavy trading area around $10 to feel real comfortable with it. Nice, like the chart. Okay, last one, Texas Instruments. Let's talk some chips, and then of course the chart. How about the data here, Renita? What are they expecting?
One of the worst among the chips. I mean, this is underperforming the
424.50
market by a huge measure,
test.
down more than 10% year to date.
Wow.
It's also trading at its lows, and analysts, they expect this stock to do a $1.75 earnings per share. That would be down sequentially. Pardon me, that number is actually $1.81 adjusted earnings.
Okay.
We're looking at revenue at $4.57 billion. That's down year over year. But on the upside, analysts expect Texas Instruments' third quarter performance to have benefited from its broad product portfolio. They're also expecting the company's efforts to expand its manufacturing capabilities to benefit the company. But in real life, this company is still competing with a weakening demand environment, and it's also dealing with the imposition of new export regulations to chips. That's expected to be another headwind for the company into the next quarter and beyond.
Okay, and last time around, they beat the expectations. It didn't do much for the stock, so expectations may be even lower, though, this time, because the last time they reported they were at the highs. Now they're at the lows. I mean, an epic rollover here, Rick.
Exactly. Trading is a cruel game sometimes. You know,
Seriously.
one moment you're making new highs, next moment, before you know it, you're down 22%, making new yearly lows. So really a tough way to, carry on in this name if you're bullish here. And kind of like I was saying with our last chart, the trend lines were a little more subjective. This one is very clear cut, I would say. Downtrend, we had our highs here after earnings. That's where it begins. Pretty consistent here, touched it many times here. Looking at our moving averages, prices below all three of them, well below them actually. They're all diverging farther apart from each other. They're all sloping down here. And really the downtrend intensified as well. Once we slipped below 161, you can see that was a point where price bottomed out several times here as well as back here. So that's why it's useful to keep an eye on these significant lows here, because the reaction can be big once it happens here. And you can see as well, momentum doing pretty bad too. So we're in the, well, I mean, good if you're bearish, I guess. It all depends on your outlook here. But if you're bullish, it's bad. We're deeply in the oversold level. We were more deeply in it yesterday, but we're recovering a little bit today with these this little bit of upside action here. But where do you start looking for some support in this name if you are interested in trading this one? Standard deviation channels might help here. Blue line, linear regression line, line of best fit based on closing prices, then take standard deviations from that point. We're between -2 and -3. Stocks usually stay between +2 and -2, so the move is already rather extreme.
It's kind of fallen off the map a little bit.
A little bit, yeah. The -3 channel comes in near 142. That's one spot to look for potential support here. For resistance, this part caught my eye. The confluence of our 21-day EMA and our trend line near about 154 or so. That could be an area to watch. Really, the main point would be 161, though. I would think that would be a point of significant resistance based on how many times we touched that level. We retested it here, too, after we fell below it and failed. So that would be another point to watch.
Texas has got its work cut out for it here after just falling apart, but at least the momentum's so bad that maybe a surprise to the upside will be more appreciated this time around. All right, thanks, Rick and Renina. Earnings, lots still ahead here this week. When we come back, let's look back on one that's already reported. Spotify is getting a nice lift here this morning. Really good stuff, up double digits.
SPY retesting the high. Hi there on SPY. Oh, it's rejecting that top of that channel. Very choppy today. Now we've kind of slowly come up. It's just been ugly.
On assets, Bitcoin included, up almost 10% on the day. Getting a little bit of a bid. I mean, if you look at the PMI, report wise, strength in the U.S. on lowering, inflation expectations and the thought that interest rates have peaked, and a different story. The information came out for Europe earlier today. It was a little bit different there from that PMI survey. So, inflation persistent, not as much economic growth. But pretty fascinating to me to see this increase in expectations for the U.S. economy and kind of the start we're seeing, albeit not a huge market mover type report, but given the backdrop of real rates. So I'll kick it over to you guys and Dan, but I think, expectations being what it is, and from this report, small sample size, but the bond market's telling us a very different story, from a trend perspective. And I think that's the dichotomy here. Can we really get core inflation? Can we really get, flattening rates and sort of see us come out of this, or are we? Has the damage already been done with rates? Right? That's the question.
Wheelhouse here, Dan. Let's talk some bonds because we've got all this great economic data, as Kevin and I were talking about. This bounce back we're getting, manufacturing above 50. I mean, bonds are selling off, but yesterday we got a little pushback, and it seems like we might be waiting for inflation.
We're waiting for something, right? So
shorts are future liars.
Below the Fed window and below the T-bills. T-bills are all stuck at 5.4. Fed windows at 537, nice. 536, something like that.
Yeah.
So if you kind of look
for
at
426 entry now,
central bankers were dead wrong 18 months ago, and they're paying the price with higher inflation, right? There is little or no.
Why not just trade to the upside?
Political appetite to slow spending to kind of help with the inflation.
Points.
So you have QE, and you have tightening sitting out there, drags on the funding markets, and it's been a very cruel summer for bond investors, down 30%. So having said all that, if you're a bond fund manager, you have to ask the what if questions, right? What if the economy continues to grow? Where is your hedges going to be in place?
Here's my biggest what if right now. What if the economy continues to grow, GDP beats expectations, but inflation stays tame, or I shouldn't say tame because it's too high, okay? But let's say inflation doesn't heat up with it. What do you think bonds do there, Dan? Do yields still go up, or is the only thing that matters in the economic data to bonds inflation?
Inflation matters a lot, right, in this QE. And people are still adding to their duration in their portfolios. They're still putting out the duration because the short-term rates might have peaked for now. But I think long-term rates need to continue to go higher.
Okay.
Steepening, correct. Steepening. Not because he was talking about flattening. I don't see flattening here.
Yeah, not anymore.
No, and then we keep projecting the 5%. We go right up to 5% and back off 15 basis points on the 10-year.
Again today, we're still below it. Thanks, Dan. Thanks, Nick DeRakis. Good thoughts, guys. That's it for me, and I'm out of here to Philadelphia for the Schwab Impact Conference. I'll see you the next 2 days live from the event. Don't miss the coverage. Have a great night and day.
Coming up on 11 o'clock, SPYs just build liquidity all over the place. Got a gap below us. Looks like it wants to come down. Breaking this little support here. Bottom of this channel, at least. VWAP. Can short religion. You could just sell puts. Yeah. Freaking ugly chop. Maybe we'll make a little head and shoulders here. Maybe retest 424.58. Get some kind of pattern going other than the roller coaster pattern. There you go, SPY. There you go. Go, a little VWAP test. I'll sell a couple of these puts there. Oh, never mind, happened too fast. Okay, sold a couple there. Put a stop on the rest. If I get stopped out, most likely still in chop. Be breaking VWAP or filling any gaps yet. In dailies, like the stops, your entries have to be almost perfect if you're trying to have a break-even stop. Because how much they fluctuate with little movements. I'll probably add to these puts if we break this level. So I think we could get a move down to low day and actually gap fill there. Get stopped out first. 11 o'clock already. Jeez.
Or $1.13 a share.
NI is back.
A year ago,
We're
so
gonna
that
get stopped
figure was
out there.
slightly lower, but on an adjusted basis, earnings came in around $1.22. That was better than expected. Revenue did fall to around $33 billion, which was in line with expectations, slightly lower on a year-over-year basis. But they did say their retail postpaid phone churn was around 9.9%. They switched up plans back in May, simplifying the way that now their offerings are letting customers customize their different add-on services. They said they saw some early availability also of the iPhone 15 at a lift to the end of their quarter, which you think would be positive news for Apple shares, which are the one laggard really of the day. Apple slightly lower. So that seems like good news as far as iPhone 15 sentiment goes. But all in all, a name that needed this lift, because even with this nice 9% move to the upside, we're still down about 14% on the year.
All right. Thank you for that, Jenny Horn. Good to see you. Appreciate it. Markets correspondent. Now let's get some insights on the news shaping the markets. And for that, we welcome in Stephen Eor, CEO of Quasar Markets. Well, we have the Fed meeting about a week away. We're in the middle of earnings season. Inflation still not where the Fed would like it to be. Tell me about what you're thinking in this current market environment.
Yeah, I mean, look, the Fed is
guy's
an
a
important
lure.
piece of the markets, right? We're always
Jacket.
watching the CPI numbers. We're always
Thing's
trying to figure
sick.
out what the Fed is trying to say. But the truth is, they're going to back off. They're not going to raise rates now. We all know that. We're already seeing the numbers in the CPI come
We all
down.
know
We're seeing
that.
inflation start to abate. I think that's what the Fed governor has been wanting to ask for, right? And especially what Powell has been saying. Hey, look, we're seeing these numbers. Even Mester herself said that, hey, we're seeing these numbers starting to bet even faster than we expected, right? And so I think right now, I don't think we see another raise probably the rest of the year.
So they should stand pat. I mean, that's what a lot of people are saying at this point. Also, you mentioned NVIDIA when we were talking about NVIDIA. Did you have an
Cannonball?
NVIDIA thought?
Yeah, it's interesting. When I was talking about this, I actually bought NVIDIA on Friday, and I thought it had been beaten up. The traders had oversubscribed on it, and they took their profits on it. And guess what? I liked it. So I was buying anything under $415. I mean, there's several reasons why I like NVIDIA. If I get the first one, I think, is that their partnership with Oracle. They have a new platform called DGX, and that's a cloud platform of generative AI as well as predictive AI. And they've also partnered with Foxconn. They're actually going to build, get this, AI factories. So we're not going to have any problem in China. And I think AI is definitely the future.
Yeah, I mean, it's already up. Today is Tuesday. It's up 4.25% just Monday, Tuesday. So it was a good pick thus far. When you think about AI, do you feel like we could have that AI resurgence? Because so many of those AI names came off the highs, right? I mean, this, for example, the high on NVIDIA was 502. Today's 431. Do you think other names could start to reemerge?
Yeah, that's a good question. And what's interesting to me is it reminds me of the dot-com era, right? When things were starting to go up and things going down, they busted, but there were certain companies that stuck around. And I think one of those companies that's going to do very well is IBM. IBM has a new processor called North Pole. It's very, very cool. And I really think that's going to be a game changer in a lot of ways. Generative AI, predictive AI. Here on the floor, we're looking at charts all day long. What if we could find charts that are for the future and not just for the past?
All right. And then you said NVIDIA you liked at least because of the partnership with Oracle. Do you also like Oracle?
I do. I think Oracle's good. I think they're making a good partnership. They needed a partnership with NVIDIA.
Right.
But obviously for me, it's like I love NVIDIA. I think, look, the chipset sector is going to be hot. I don't think the China news is that big of a deal. I think it's a bunch of noise because, quite frankly, everybody's got a video card in their machine now. You need that power to power AI, and we're going to need even more power to power it. So NVIDIA's right on the forefront of that.
Yeah. Let's turn our attention over to what consumers are doing. I know you have Royal Caribbean on your mind, which is right now I see it RCL. It is trading at $82.98, well off the highs, but still has had an incredible 1 year, right up almost 70%. Tell me about your thoughts here.
Yeah, it's very simple. We were expecting a cold winter. And with that cold winter, obviously, people are going to come south. And you know what? Royal Caribbean is best in class. And whenever I'm investing, I always want to pick best in class. And, I think one of the cool things about that is that they have a new island. They are expanding down there in the Bahamas. And they're in growth phase. They're not actually in pullback phase.
So it's about picking the best in class. So you stay away from Norwegian and Carnival. Is that really, I mean, you can
still like
see
those.
The difference between those?
I still like them, but they have their own place. But Royal Caribbean to me is best in class. They have other places too that they go to around the world, Asia and Africa and Japan. And they have some pretty cool places to go, and they also own celebrity cruise lines. So to me, that is best in class.
Yeah. What are your thoughts on so many of the names, the Magnificent Seven? Many of which are reporting this week. We have 1/3 of the S&P 500 names reporting this week. Your thoughts on earnings?
You know what? Everybody's beating. Third quarter beats are good. They're coming in. There is a sour note out there. I think everybody's a little concerned. Is a recession coming? I'm going to say yes. We still feel like it's coming this way, especially if the Fed doesn't stop. But I still like it. And I'll tell you, outside of that, one of the things that I was very interested in, it was Coca-Cola beating earnings as well as they did. That was one, especially with Ozempic and all the things we're talking about. I mean, Coca-Cola is beating the numbers.
Yeah. How about, we'll get GDP, we'll have some home sales numbers, we'll have PCE, the Fed's obviously favorite indicator. Tell me about the economic prints that you're watching. Are you expecting anything out of the ordinary, or what are you thinking?
Yeah, I mean, I think for CPI for sure. I think we're going to see a little bit of a flattening now. We've got a little bit of a time frame between now and I think in January. We're going to see inflation still pushing up because of Hanukkah and Christmas and those sales for seasonal. It's going to be a kind of a challenge for the inflation side. So the Fed is going to watch those numbers, but I don't really think it's that big of a deal. And I still think, Nicole, that we are going to cut rates next year. I think they have to.
Yeah, really? How many times and when?
Twice.
Yeah, wow. All right, Stephen Orr, great to see you. Thank you so much. Love when you're here in person. Stephen Orr of Quasar, thank you. Coming up next, it's the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat goes through the technicals. Joel Hawthorne takes us through the trades for FedEx, Netflix, and ARM. That's next, right here on Trading 360. We'll be right back. How are you feeling about the market today?
Good morning. Thanks for having me, Nicole. Always a pleasure to see you guys. I think right now, we are just kind of taking a breath, if you would, from just some of the recent action we've seen in the overall market last week. We know we saw some price levels, some price action get tested down to the downside. And I think markets were a bit uncertain if that downside momentum still has another leg to go lower. The narrative hasn't changed much. I think everyone's still watching yields, watching the dollar, watching the VIX. I think some of that is just giving a broader narrative of what the possibilities are. So I think some people are caught in limbo. A lot of traders, short-term traders, may be caught in that mindset of, is this a bounce and a rally here? Or is this just a bit of a short-term stop and maybe another leg lower?
Oh, that's the question. A bounce and a rally, or right, exactly. Let's get to FedEx today. Often an indicator of our economy too. What are your thoughts on FedEx today, Joel?
Today it's up about $4 or so, trading 242. I do think there's some weakness. I think we've seen here since it hit about 270 here. Just it looks like here sometime in late September. I think we've seen a bit of a pullback, and we've seen several days where the price action has made lower lows pretty consistently. We've seen that it just cannot recover back to that 270-ish area. So I'm a bit of a bear. I think that, right now, I think there's a lot of price action that the bears have the momentum right now. So I'm going to go with that trend.
I see. All right. Yeah, because right now I see it up 1.8%. What do you think, Rick, of this FedEx chart today?
Well, this is an interesting chart here because we were trending up strongly for a long time. I actually took this chart back even further than 1 year. This is from September 2022. You can see this blue dashed line here going across the lows was in play for quite a long time here. But Joel was right. Once we hit that 270 level right around here, we peaked above that point, hit our yearly highs near 270.95. But then we faltered a little bit. We were not able to take out those highs the second time either. That started a small downtrend here. Since then, things have kind of fallen apart rather rapidly. We've fallen below our 2 moving averages, our yellow 21-day and our orange 63-day exponential moving averages. We fell below our trend line. The moving averages are starting to slope from more upward to sideways to a downward slope, which suggests the trend is deteriorating even further here. So, the recent price action has been not good for the bulls. We're down almost 11% from those highs here. And you can see as well, if you look at momentum, this was during our first peak here. We were in the overbought. Momentum was flying high, trending down since then. This was our second peak here where we took another stab at those yearly highs, much lower. We saw a little bit of divergence, even bearish divergence. Now momentum is struggling to stay out of the oversold area. So really, all signs point to the trend being down here right now. So where do we look for some potential support? Right here. We've got our purple 252-day EMA lining up with some old highs that we established back here. That was around where price topped out many times. So right around the 233 level is potential support. For resistance, we've got our moving averages right here near about 250 to 253 or so. We've got our 21 and 63-day EMAs. Those would be some points to watch to the upside for potential resistance.
I see. Okay. So you're seeing that bearish trend. Whether or not it gets into oversold territory becomes another topic. But that's how you're feeling, Joel. Bearish, right?
Absolutely. I couldn't agree with Rick more. Definitely bearish here for a bit of a short-term trade going out till November 17th. So going to sell that 262.50 call, simultaneously buying a 265 call, same expiration. A credit of about 20 cents and break even is 262.70. Trying to get the best price I can while anticipating that above 260 will be hard to break in the short term here to the upside for FedEx.
Okay, next up, Netflix. What are you thinking here? Netflix right now today in the 412 range. You're feeling a little more bullish on this one, a different story.
Yes, indeed. Hard to not be a bull in Netflix after the earnings report that they put out here just about a week or so. I mean, they reported the same day as Tesla last week. I believe that was last Wednesday or so. And they just crushed it. I mean, that stock was up probably about $50 or $55 or so after the earnings report. We see it's trading right now about 412 and change. And just tough to be a bull, tough to be a bear right now with that kind of price action, that kind of momentum. There's a huge gap on the chart from when they reported earnings. And so I definitely want to be a bull, but I don't want to chase after these highs. So getting bullish, but strategically.
Okay. What do you think here when you look at Netflix chart today, Rick?
Interesting price action recently, kind of a dramatic chart worthy of a Netflix original series here, because we had this very long-term uptrend here, even longer, going back even further than our last chart here, all the way back to June 2022. You can see this blue dashed line here. We've seen a pretty consistent follow through on the chart for there. We topped out near 485, and we started trending downward here, forming kind of this triangular shape here. We broke through to the downside. We broke through all our moving averages. We slipped through a key point here, this 369 level that represented some highs, this green line here. Things were looking pretty bad for a little bit here. Then earnings come in, bam, 16% one-day gap up, took us back above our previous support level, which was now resistance, back above all three moving averages. The yellow 21-day trending upward now, orange 63-day starting to barely trend upward from its downtrend. So really very interesting. We even have this white dashed line channel here, downward sloping channel. We're right near the top of that area here. So it's kind of like Joel said too, bullish, but a little cautious here because we still have this downtrend in play here. RSI moved above our midline there, so following the price action, not really too much crazy to talk about with momentum here other than it's just had a very steep rise along with that earnings move here. So now where do we look for support and resistance? If we keep going to the upside following our bullish outlook here, we've got a volume node around 440 that could be a resistance area, but really the area that caught my eye the most was these previous highs from late August, early September, right around 452, this red dashed line here. To the downside, we've got some moving averages to contend with, but the area right here, that green dashed line near 369, roughly in confluence with our purple 252-day EMA. So between like 369 to 372, that would be a major support point to keep an eye on.
I see. All right. So you had that downward trend channel, but
8 minutes to EU
pushing
close.
up against the top. Final thoughts, Joel.
Yes, want to get bullish here, but I'm actually going to be selling the 365 put expiring November 17th, simultaneously buying the 360 put expiring the same date. Credit of about 40 cents, break even 364.60. Taking a look at that chart, we talked about that gap, that price to the downside, that 365-ish level is exactly where that gap up took off for earnings. So that's exactly the way that I'm structuring the trade. It would have to fill the gap to the downside, essentially, in order for me to be wrong. Not impossible, but definitely right now with the current momentum that it has, up $5 today, I think the bulls are still in control of Netflix for the time being.
All right, and next up, ARM. There was a report suggesting NVIDIA is working on ARM-based chips. Right now, we're seeing ARM at $52. Where do you think it's headed?
You know, that 52, 53 mark has been a bit of short-term resistance here. Looking at this chart, I mean, I'm looking at a daily chart right now, and we can see just multiple tops and right around that level. I do like the bullish momentum that it has from yesterday and actually hitting a low on Friday of 46.50. So, and I also think there was some negative news. I don't recall recall, but I think there was some kind of hacking or something going on. I'm not sure. There was some issues going on or something there. Some negative news on Friday that caused it to kind of take a dive. So coming in today, hopefully that's behind them. And I do think that there's some bullish momentum, but again, another cautionary bullish play for me.
Right. You know, how cautious do you feel when you look at this chart here, Rick?
Well, I think that we're in a really interesting position on this chart because we're right at a key resistance level here. But if we, kind of talk about some of the differences between this chart and our last charts, our last two charts were long-term. This is a very short-term chart. This is an hourly chart, not a daily chart, since September 14th when trading started on this product here. You can see since those highs all the way back over near the beginning of our chart, we've had a downtrend here. We broke through it recently, moving to the upside here. These moving averages, this is a 20, 50, and 200-day simple moving average indicators that we have here, yellow, blue, and purple respectively here, because our exponential moving average didn't really work well on this shorter term chart here. So we switched it up to, we can still use them in the same way though, to assess trend direction and use some support and resistance here. We can see the shorter term moving averages are starting to slope upward here. But what really caught my eye, that same level Joel was talking about, 52 to 53, we have two things that are happening just below that level. We have our volume profile point of control right at 52. We have our 200 period simple moving average right on top of it. So we've got a confluence of resistance there, but take a look right here too. Maybe a little hard to see, but you can see price topped out multiple times, right around 52.65 right there. So that would be a key area to breach heading into the upside as well. That would be another resistance area. You look for these areas where price stops repeatedly near the same point. It's the kind of thing you want to look for a potential breakout. If we were to keep moving upward here, we've got another area where price stopped numerous times here. Right around the 56.40 level, that could be another area to watch to the upside here. To the downside, I would be having an eye on our old trend line here. So right around this area, maybe near 48.50 or so, that could be a potential point where we might find some footing. But below that, our old lows near 46.50. That's really the line in the sand here for this particular product here, because that would be the door to further downside. That could be an area where we really start to fall apart if we keep making new lows beyond that point.
Right. Okay. Final thoughts here, Joel. Anything you want to add?
Certainly. I'm going to use Friday's low, which is the low so far since ARM has gone public. That is a 46.50 low. So I'm going to sell that 46.50 put that expires next Friday, simultaneously buying a 46 put, a credit of about 9 cents, break even of 46.41. So we'd have to reverse and take out that low from Friday in an effort to make a lower low. And then that would force me out and make me, and I would be wrong. So looking for it to possibly find some resistance here as it's done today, but chop around for at least for the next 2 weeks or so. And hopefully I'm able to keep the premium that I collect.
Okay. Hopefully you will be able to keep that premium that you collect. Thank you both. Joel Hawthorne, the morningsnapshot.com, and our own Rick Ducat on the charts. Thank you both for being here for the Big Three today. Coming up next, we're going to spotlight some of the biggest earnings and these names to watch: General Motors, Microsoft.
See if we can get to low of the day. Form a little handle. Fill that gap. Might take time though. Given that it's the middle of the day, EU just closed.
Within the banking system, especially overseas. And hopefully, as we kind of see these rates start to level off here a little bit, it provides these financial companies a little bit of a floor when it comes to their profitability. And then they're going to be able to try to perform a little bit better, hopefully for next year. But once again, not a really good chart when you're looking at Barclays, and we have seen just all of these consolidations taking over, happening overseas because of things that occurred with Credit Suisse and things of that nature. And unfortunately, it just doesn't seem like the dust has settled as of yet.
All right, thank you for that. I mean, we saw it going down along in sympathy with Morgan Stanley at one point, but to your point, they're doing these changes in order to cut some costs in a high rate environment. In a tough environment.
Holland's up 20%.
Now known as RTX.
Yeah, we are seeing the shares move to the upside here today. They actually reported better than expected earnings, and they also are actually highlighting the fact that they continue to see demand in certain segments of their business. Now, knowing that, they actually did see around a 21% decline on a year-over-year basis, and their adjusted earnings per share actually came in at $1.25. The street was looking for the adjusted earnings per share to come in at $1.22 here, and they also had some charge-offs in this quarter that will not be reflected in the next quarter. I think the street is also really appreciating that fact as well. They have been working on some of these issues that they've had with defects because of a supplier issue, but they have been a little bit more bullish when it comes to their optimism moving forward here, and that's why we're seeing them move to the upside when it comes to the stock for today. And we know that a lot of these defense stocks have actually caught a bid because of the conflicts that we are seeing overseas. Now, that is going to be obviously a near-term issue, but there is a hope that we will see some increased spending coming from not only here in the United States, but around the world in order to bolster defense systems. And that could also be a benefit for RTX moving forward.
Okay, thank you for both of those. Kevin Green, senior markets correspondent. All right, we are now in the thick of earnings season. You have about 1/3 of the S&P 500 reporting this week. Stephen Guilfoyle, known as Sarge, founder and president of Sarge 986, joining us right now. Thank you for being here. Before we get to the names, tell us a little bit about the trend that you're seeing. What are you watching on the S&P 500? What are your expectations for earnings season?
Well, my expectations for earnings are probably trending towards the positive. My expectations for stock performance, I'm a little less optimistic about that. I think corporate performance will be fine, or leaning towards fine. I think that the market, though, has probably run its course for now, unless we can resolve some of these broader issues that we have in the government, geopolitically, fiscal policy, so forth. There's just so many things up in the air right now that I don't think investors and traders can have the kind of certainty they need to move into what is normally a seasonally strong season, unless we see some rapid improvement. Now, you might get a Speaker of the House by tonight. That would go a long way towards solving some of what's ailing the market. But without that, no, I think it's going to be choppy for a little bit.
Right. The market does not like uncertainty, to your point. And so, as you mentioned, geopolitical risk, fiscal, monetary policy, and Speaker of the House also, that is still not complete just yet. Let's talk about some of the earnings, though. You did say that you expect earnings trends to move more positive. How about GM? This is not a positive story, obviously, so I don't mean to correlate the two, but it's a big story.
No, General Motors and Ford, I don't think an investor or a trader, well, a trader can do what they want. They can get in and out quickly. But I don't think an investor wants to be in those names right now. I don't think, like I just spoke about uncertainty, I think that you couldn't possibly be more uncertain when it comes to these names, and Stellantis as well. With the strike ongoing, with their lack ability to make a projection forward as far as electric vehicles and the rest of their businesses. I just don't think I'm not going to be in General Motors. I'm not going to be in Ford. And I am likely to play Ford on and off throughout the year, but I won't be touching it until these issues come to some kind of resolution.
Yeah. And you said names like Google, Microsoft, these are the kinds of things that can save the day or something?
Well, I mean, yes, because tonight when we get those names, if they blow expectations out of the water, if they sound right in the call, if the Microsoft call is, if they can mention artificial intelligence 20 times and there's a positive algorithmic response there, you might get a pop in NASDAQ futures. So yes, they could save the day for the short term and move things higher. I am long Microsoft, by the way. I'm not long Google, but Microsoft, I think, is far more important than Google, at least from an investing standpoint, because they're involved in so many measurable businesses, and usually they come in pretty strong. And Satya Nadella sounds great on the call. Last quarter, 3 months ago, he didn't sound that great on the call. Let's see how it goes here. Microsoft, I think, is really one of the backbone names of the tech sector, of the U.S. economy. And I'm still probably long more tech stocks than any other kind of name, any other kind of sector. So I will be watching this, and I will probably be trading it today after 4 o'clock.
Yeah. Oh, okay. What about Coca-Cola?
See if SPY can make it to low of day.
3M, have they gained on the quarter, raised the outlook? A couple of those names?
3M, I wouldn't touch with a 10-foot pole until some of their issues are resolved. I am short. You want to know what I'm in? I am short. Pretty large position in Netflix right now. You just spoke about it in the segment before. I think there's a huge gap here to the downside that probably fills as soon as some of these other earnings come in not so hot. As soon as there's a reason to sell stocks. When stocks are sold broadly, I think the next time they're sold broadly, I think Netflix comes in. So yes, it's a bit risky. I have to hedge this trade. But Netflix, I think, will come in. My net basis right now, let me see where Netflix is. It's trading around 410. Okay, my net basis is 403. So I'm down about, let's see here, 1.8% on that trade right now. But I can be patient with that one, I believe, because I don't think Netflix can hold the gains they made last week. I'll be in Northrop Grumman. I'll be in General Dynamics as the week goes on. I'll be in Amazon as the week goes on. These are the kind of names I want to play. But I'll be honest with you. I am smaller in equities right now than I usually am at this time of year because of the uncertainties we spoke about. So I am higher in cash and higher in real estate than I am in equities right now.
Oh, okay. Good to know. Thank you so much, Sarge. Great to see you. Thank you always. Stephen Guilfoyle of Sarge 986. Coming up next, George is standing by as an overlooked semiconductor name for our disruptor today. He'll tell us all about it. And remember, be sure to tune in this.
Oh, melty. Got the flush. Closing one of those puts. Might get a little handle on this inverse cup if we do test a low today. Another chance to enter, maybe around VWAP. Try and chart it out when it comes. It's not been a beautiful, I mean, we'd like to set up for now, it's not been a big move yet at all. It's very minor. Unless we get this gap fill, it's going to be just chopping and liquidity building, potentially go back up. All the day now too, this sucks. Hey, busy. Stuff 49,000 mullen. Thanks to me. Uh-oh. You bought mullen because of me? I don't think anyone's ever said that before. That's the biggest dumpster fire stock ever. Our chart has looked good at times though. But that time's long over now. Looks good right here. Where did I say it looked good? RSI divergence, I think. Won 106 million. Oh, I just won a WSOP bracelet. What? Look at that. All this hard work trading stocks has led me to a WSOP bracelet. Beautiful. Holy smokes. Alright, Spy's coming down here some more. I'm not calling that the inverse cup completed in a handle yet. We're just getting some liquidity here near the lows. So I'm drinking orange juice, so, you know, lemon. So busy. I kind of remember talking about Mullen, how the chart looked good, but that was a while ago and it stopped looking good for a while, so hopefully you made money on it. Sounds like you still have it though. Oh, that's not favorable. Yeah, I don't like the chart anymore. I can't remember where we said that. I think it was maybe here. This RSI divergence. It was a short little trade though. Wasn't it? I don't remember. Futures, options, right here. Learn right here. I will answer your questions. With options, I would start with selling cash secured puts. And with futures, I'd probably just trade like micro ES / MES. That is futures on S&P 500. So it's basically like just trading shares with leverage. Futures probably easier, I would say, than trading options. So maybe starting with that before options. Candlestick reject. I like that name, that's funny. I hope they catch the bad guys. On Mullen. Well, busy. I mean, there's still a chance with barbecue, I think. So, you're not upset with me. I did sell, and I wish I had bought back in. I was able to, and it was around 7-8 cents. I actually was trying, but I couldn't at that point. Even got Moo and everything to try and get it. But with a smaller position and position size. Yeah, options. There's quite a bit to options. Like to actually learn options, to learn all the Greeks. I don't even like have a good handle on all the Greeks. But really, if you want to know, I mean, that's really what we should do. Learn the Black-Scholes model. I'm gonna get deep into options. You can definitely lose money without learning the Black-Scholes model and options, though. So I think selling options is the better way to start with options. Selling covered calls on your shares. If you have shares, that's an easy way to do it. Or selling cash secured puts. But yeah, if you have shares of something, like in a long term, something you're holding forever, then selling covered calls on that that's a better way, more simple way than starting with cash secured puts. If you have shares of something that you plan on holding for a while. But before all that, yeah, futures is very, very straightforward, at least compared to options, because there's expiration dates, but there's not really theta decay, and there's not all the Greeks, so you don't have to really concern yourself with the expiration. You're just picking the next expiration typically that has the most volume. So everyone's trading on those contracts, and then it's dollar for dollar. Short here, goes down, you make this much, goes up, you make that much. Whereas options, it's not that simple. Yeah, I think the barbecue shareholders could be getting equity in another company. I think so. Oh, 30K, yeah, you're golden. I mean, it's not, from what I can tell, it's not over yet, so until it's over, it's not over, to me at least. When will it be over? I guess when the brokerages aren't, like, doing weird things with the options. And yeah, I haven't heard confirmation of that. I guess that's the last thing to me that's kind of strange. On our Discord, who was it, Nighthawk, or some people are saying they're like getting refunds on their options, which you don't, that doesn't happen ever. I'm not sure. That makes it seem like they're trying to share recall, or however you want to put it, and just cleanse all of the equity, or all the shareholders, and clean the whole options chain, and yeah, but I'm not familiar with bankruptcies, so I don't know, maybe this is totally normal. That doesn't seem normal, because I've never heard of getting money back on an option like that. SPY chopping around here. What a choppy day, man. This week has been pretty awful so far. Monday, there's like two setups on Monday amongst all the chop. Today there's, I mean, maybe one. Never like anything else, even though I was taking them. Maybe climbing back up to VWAP. Still have most of these puts. Kind of sucks. We never even tested low, so this, I don't know. I guess this could be the cup and the handle being built here. All uncertain. There's still that big gap down there. There's VWAP. 12 o'clock. These are just getting burned by theta. Feeling that theta chop burn. Wow, the big rejection on VWAP. I want the gap fill. That's what I want to sell, but definitely don't want to be just stubborn holding it for that. If that doesn't happen, figure out where the losses or ugly day for trading. Whew. Yeah, I guess Webull doesn't have futures trading. You have another brokerage that you can trade futures on? Thinkorswim, you can paper trade futures and options. There's TD Ameritrade or Charles Schwab now. Yeah, with Webull, I would just probably leave it on default. Don't worry about customizing stuff until you know what you're doing. Because default's probably, yeah. For paper trading and then just options template. If you are going to start with options, I would definitely start with, if you have shares in a long-term portfolio, start with paper trading like you're doing, which is good, but paper trading cover calls, seeing how that works. Picking, you could pick like a 20 delta or 30 delta, so 0.3 on the delta Greek, and then just pick the monthly expiration, which has the most liquidity, has a little bit higher premium, and that monthly options are every third Friday. So in October, called OPEX, the options expiration was on, monthly one was on the 20th, which was last Friday. And some stocks will have weekly ones, which will be every Friday. But they'll all have at least quarterly, if not monthly. It'll be the third Friday of every month. I would start by picking that. And you could stick with a certain delta, sell cover calls, try and open them on a good green day, because it is theoretically a short position. So you want the stock price to be below strike price that you pick by expiration. Ready to day trade? Okay.
in that GE raised its outlook as it prepares to break into these two companies. Full-year earnings guidance to a range of $2.55 to $2.65 per share. That's up from a prior guidance of $2.10 to $2.30. So also good news there. Free cash flow is now expected to come in at about $4.9 billion, up from prior guidance of about $4.4 billion. So that's also being welcomed on Wall Street. And, you know, I mentioned Larry Culp also on the earnings call. He said GE Aerospace continues to experience rapid growth driven by robust demand and solid execution, largely in commercial engines and services. So some positive commentary on the call as well.
Caroline, I don't know if you know this, but I have a little bit of a history with General Electric in my career. And the problem is when people see GE, they think of this big company, and it's just not as big as it used to be. It's a fraction of what the company that I traded for 20 years with GE, with Jack Welch as the CEO. That said, the transition of GE to a smaller, more lean company, focusing on healthcare, focusing on aerospace, GE jet engines, right? And focusing on energy is a company that has a pretty bright future. You just mentioned all the things going on in aerospace with jet engines, things like that. This is a smaller company that doesn't really resemble the old GE, but that might be a good thing, Caroline.
Well, it certainly seems to be a good thing. Obviously, this is a stock that's not trading at, you know, its previous highs, but as we said, it's really seen impressive gains over the past year. Investors clearly like the slimmed down version of the company. It's also, you know, through these restructuring and asset sales, it's been able to reduce its debt by more than $100 billion over the past few years, since about 2018. And, you know, you talk about the bright future. That's despite the fact that it did in 2020 complete the sale of its lighting business, something else it was known for. And then, of course, it spun off the healthcare business in earlier this year in January of 2023. So definitely seems like, you know, investors and even the analyst community, because, you know, despite some of these impressive gains over the past year, if you take a look at the analyst community, they're still very bullish on the name.
You're high there on GME, up
18 analysts that
5%.
cover the company, 12 have a buy rating, and the median price target implies more than 15% upside from where the stock is currently trading. So the median price target's $132.50. GE is currently trading up more than 6% today at around $113.50. So the analyst community also bullish about a smaller, pared down GE, which even I don't have is as much of a storied history as you, Kev, but, you know, even in my history of covering GE, it's certainly changed quite a bit as a company.
Where have you gone, Jack Welch?
Yep. He was an icon for that company. All right, thanks to Caroline Woods, senior markets correspondent here, breaking down the GE earnings, having a nice rally today. But Kevin, you mentioned, you know, some of the PMI numbers earlier. A couple of the key points that I wanted to kind of address on this. Prices charged slipped to the lowest level since May of 2020. Composite index rose to 51 from unchanged at 50.2, expansion since February. But then input prices fell to 56.5, lowest reading since October. So input costs starting to come down. Right. And you're starting to hear that rhetoric out of some of these industrials that reported today that, hey, inflationary pressures are really starting to come down, especially in that manufacturing side.
That's a really good thing for manufacturing, right? The input costs are a big problem. And if that's true, and if their numbers are getting better because some of the input costs are coming down, that means that this strong economy, low inflation is real. And people gave that a very low probability to have. You know, everyone talks about a soft landing. We've been talking about it since 2020, right? And the problem is it's a theory in an economics book. It never happens. Well, we may be watching the real version of this happening. And Jerome Powell, who's gone through unlimited amounts of scrutiny, that he went too early, he went too late, he did everything wrong, is by definition navigating a soft landing. And so the legacy, the history will show that he's got us, I'm not saying we're there yet, he's got us perilously close to a soft landing.
Yep.
Perilously close.
I get your optimism about him, but let me read a quote from Jamie Dimon at that conference in Riyadh, Saudi Arabia.
Jamie Dimon talks his book, so once we know that, go ahead.
Jamie Dimon criticizes central banks for dead wrong forecasts. You and I have had this battle back and forth that
I feel like SPY's still going to fill this gap
Jerome
today.
Powell has done a
I don't
good job.
know.
And I'm not saying he hasn't, because he's fighting
Hopefully it happens
against
before
an
too long, though.
administration
There you go.
that's working against him. So he has navigated it, but their forecasts, and this isn't just during Jerome Powell's tenure.
No.
This is forecasts across the board from all the Fed leaders.
Exactly. I mean, the Fed and the U.S. government, legislators, have always had a bad relationship because you got to stay in line.
Yeah.
Don't criticize the administration. However, we're torpedoing everything you're doing at every turn. So that said, I mean, think about this. In an environment where he's raising interest rates to try to slow down the economy, we put $4.8 trillion in spending out there. How is that trying to control an economy? But Jerome Powell's not allowed to mention that. He's got to stay away from that third rail. But I think some way, somehow, he's still by the Ben Bernanke school of what you do and what you say. And the rhetoric talking about it has done a lot of his work for him. And I think it's come out to be okay.
No movement
So
from
far,
the EU close.
we're on the path for a smooth
12:15.
landing.
Thank
It's
you, the
highly
18 of you, for your
unlikely,
thumbs up. I
yet
appreciate
here
it.
We find ourselves with strong economic data and what you just mentioned, inflation coming down.
Yeah, that
SPY's been
battle
very
between
choppy
the
today and
administration and
unkind.
some of the legislators.
You day pokers.
versus what, the Fed is trying to control.
Yeah.
Always battling. And
it's not
these congressmen. We don't talk politics here, but those congressmen, they've got to stop.
He used the term transitory.
Yeah.
And then they held him to that for the next $5 trillion in spending.
Yeah.
And they held him to the word transitory because he used it once. Well, the world changed.
Yeah.
That was that vote. You know, you got to take Jerome Powell, what he says, as a snapshot of the economy at that time.
Right.
And he probably thought this was going to be temporary. And then $4.8 trillion in spending comes along, and well, not surprising that it's dragged out slightly.
The problem is the Fed will take the fall for it.
Yes.
They'll take the blame for inflation, even though they're not causing the inflation. We all know that.
You heard Jerome Powell in front of Congress when he was in front of the Senate being grilled for the potential job losses when he raises interest rates.
Yeah.
Well, they didn't show up.
Yeah.
They're not showing up.
What do you mean you see Pulte saying
But
that?
But they have a very short memory. Like they.
Oh, that's why the price action today?
Politicians don't think that we record these sayings and the things that they say. Oh no, I didn't say that.
That goes
It's on tape.
Oh,
You
okay.
saying
It
that.
goes away.
Yeah, exactly.
As long as they're not saying that.
Perilously short memories.
We talked earnings and some of the results that have come out. 3M's having a good day. Kimberly-Clark's pulled back a little bit. GM's pulled back a little bit. Another strike at another GM facility. That's not lending support at this point. They kind of push back.
It's above that steeper resistance,
Yes,
so
exactly. One of their money
got two more
makers.
to contend
But
with.
looking ahead to earnings, and we're talking about them today, Microsoft, Google, Alphabet.
Yeah.
The five biggest companies in the S&P 500, and that includes Microsoft, Google, Alphabet, Apple, Amazon, NVIDIA, account for a quarter of the benchmark's market cap. These are really important, even though maybe you're not invested in these or maybe you're not trading them. These are really important to the overall breadth of the market, right?
Remember, Apple, Microsoft, these are in 3 of the 4 indices. When they move, the market's going to move. And, you know, we're going to talk about Microsoft, so I won't get in there. But some of these companies that are so big and so massive and control so much of the U.S. economy, like e-commerce, like the cloud, like search, you know, the market shares that we're going to report here are staggering.
Yeah.
And, you know, and these are such big companies, which so when
Mixed
they
in our
move,
Discord.
when they have an event, the whole market.
What's happening at
moves.
barbecue?
Yep. As you mentioned, Microsoft in 3 out of the 4 major indices. Google, Alphabet's in a couple of those.
I see some pretty
So those will be the
reliable
focus. They will
sources in
most
there.
likely lead markets at this point. I think
Saying
the
their
flip side
options were like
is the
refunded or
fact that
something.
The companies that reported today, like the Coca-Colas,
Um,
3Ms, Kimberly-Clark, GE, GM,
News, Twitter.
those were all the stocks that were
Um,
underperforming
you guys
the market.
chat, honestly.
And they had some decent numbers
Chat's
out of most
following
of them.
a lot of
even though
different
a
news.
couple
We'll
of them are
drop it in
down.
here.
On the flip
RTX,
side,
Discord.
yeah.
Don't forget RTX. Don't forget Spotify.
Right.
Those were all up pre-market.
Yeah. On the flip side, we've got stocks like Google Alphabet that are up 57, 58% this year. Valuations
Jimmy
are
scared
growing.
you to
Microsoft,
short?
the same thing.
Green energy?
They need to maybe hit every metric right
You can always
on,
just
guide a
take
little
puts. You don't have to
higher,
short the shares if
or
you're scared.
could potentially see some damage done.
The bar is very high.
Yeah. The
I've got
opposite
some
of
numbers on Microsoft that'll show.
It's no
how
more
far
scary
it's
than going
run
long on a
and
stock.
the valuation. It hasn't been up at these levels very often.
Put in the risk
and when it does, it
parameters,
doesn't stay
stop
up there very
losses,
long.
and
Yeah, and we saw that at NVIDIA's
Let
results
it go.
last time. They blew out numbers. Expectations were pretty high.
Come on,
and the
Spaz,
stock
do
still
it.
sold off
There
a
you
couple days
go.
after that report. All right, let's take a quick break here. When we come back, we're going to get
Do
into a
it.
discussion on Microsoft. The tech giant's seen its stock rise about 38% so far in 2023, and reports earnings after the close. This is a big one. Stick around right here on Fast Market.
It's a big one. Is it a new low? It is new low on SPY. Starting to fill this gap. Here we go. I can slow play this guy a little bit. He might have an ace too, but more likely has a queen. And all in? Dude, someone has a full house, don't they? The only thing I can imagine. Got an ace queen. Oh my gosh. Why'd I raise 20k? It's meant to do full. Hit queens. Yeah. Probably sell one there. I think I sold one. Yes, I did. Beyond Meat is a very crowded short, as we heard from the S3 partners. So it's, as much as you want to short it, this wouldn't be the time to start shorting it. Anyways, it's susceptible to squeezes, as we've seen, like this rip from $10 to $20. That one at all-time lows right now, though. I mean, they make some money. They have 100 million a quarter in revenue, losing 53 million on it. Market cap's probably still too high, 100 million, but at the chart, it's just yeah, on a pump, definitely. Right, SPY. How long will it take to fill this gap?
Around the PE ratio, right? You can a direct correlation. Here's one last thing, Tom. Would you buy ATV right now if you could. Remember, this started 2 years ago.
It's really, really late.
Activision Blizzard?
Yeah.
Well, I said that on the show.
Rivian's
that
still super elevated, though.
$68 billion that they were spending for it.
Me.
Because I didn't know if that was fair
I'm short.
value.
I'm short a lot of green.
Microsoft obviously has done their homework. Probably better
solar
than I would,
and EVs.
valuing, a company
Rivian
like
is
that
no
that
exception.
makes video games.
They better transform this company because think about this.
I mean,
At
just what it's
$68
down
billion
from
at
where it was
4%,
IPO'd doesn't mean much.
It's more than Activision's going to make this year in terms of.
That was the most bullish time ever for EVs.
So,
and the most bullish market we've seen in generations.
But like I said, I think it's probably what Microsoft is going to do to that makes it attractive.
So,
but still,
like compared to
I want
that,
to be long a stock. Sometimes I want to be short a Tom.
Yeah, and it's had a good run so far this year, as I mentioned, up about 37%.
It has a 16 billion market cap.
Expected to make $252 per share.
Last quarter is their best quarter yet. It's $1 billion in revenue. They're losing $1.2 billion on it.
Full year ending June, earnings are projected to rise about 5.7%. Now the stock's valued at continued
in a recession.
You're going to have to look at
the
intelligent cloud business.
Can think that maybe coming into a recession.
360.
No one's spending $100,000 on a pickup
How are they integrating
that only goes 250 miles.
Enterprise businesses going to spend that extra $30 per user on their Copilot?
It's a company that's new, and there haven't been new auto manufacturing in the United States, around the world, hardly.
Right.
Are they at all in the last 20 years, other than Tesla?
As it weighs on a lot of companies, but it's weighing on Microsoft. They've got other things that are doing extremely well, but that one part doesn't make for lofty valuations.
All right, so the CFO at a Goldman Sachs conference did state that Amy Hood stated that absolutely AI should be the fastest $10 billion business we've ever built. So that
I don't think you're late on the subs, but better to be late than wrong.
They're not taking market share from Google Alphabet as far as search
Catch
goes.
momentum.
That
We're at the wave.
Maybe they took a little bit at the beginning.
Man.
That'll be a key. What kind of commentary they have around that?
And we'll get into that in the Google discussion.
Yes.
But basically, to put it in a nutshell, Bing has been a flop.
Yeah.
It made no effect. Everything they put into that has no effect on Google search.
Yep. Option market's pricing in about a plus.
That was hilarious to hear. Bing's number one search is Google.
Basis, not an outside move at all.
Yeah, I think that was Bing.
7.4 billion shares outstanding as far as their float goes. How do you want to look at this from an example trade?
So I've got a theme for the two trades that I'm bringing to the show today.
Yeah, I've seen that. It's all one piece. That's hilarious.
Money. So
got to PDR it.
The learning part of this is using variations on a theme, Tom.
I mean, there's a reason why there haven't been new auto manufacturers. It's just not an easy business.
For this trade, for the Microsoft
not in this country,
trade,
not with the regulations.
On the trade,
very tight or crowded space.
A call vertical.
Right. Sorry.
So Elon Musk, the only way he was able to do it is because us taxpayers.
But a diagonal.
Okay.
So a variation on that. So what I did, I looked at the expected move, got in line with it, sold the 342.5, 347.5 call vertical. Okay. Then I used that money. If you would do the 320 call calendar, you could do this for almost flat. But I wanted a little more
slowly
meat.
starting
I
to
wanted
fill
a little
this
more
gap.
delta on this trade. So what I did the diagonal instead. I bought the Nov 3rd 330 put and sold this week's 320 put in line with so I made it a call diagonal.
Papa's buying calls?
Family, but a diagonal financed by the call vertical. It's trading right now. It was under $4. It's creeped up higher as Microsoft's rally has kind of faded. Microsoft spent a lot of money higher.
In the
it's
world?
now faded back down towards unchanged. So it's trading almost
we get calls
now.
once that gap's filled, maybe.
And that's what the dynamics.
We show earlier.
Yes.
And I want more confirmation
hey,
of
it's
that.
already
But
working out. This is an example trade, though. But let's break down this complex four-legged spread that Kevin brought us here. Going out to the October 27th weekly series. So those expire in just 3 days. Sell the 342.5 strike call, and then buy the 347.5 strike call. That's a $5 wide short call vertical that expires in 3 days. That helps finance the purchase of the diagonal. He went out to the November 3rd weekly.
Just scalp there.
The 330 strike put, bought that put. That's 10 days to expiration. Sold the near-term October 27th 320 strike put, $10 out of the money to the downside. We've got 385 net debit on that spread right here, Kevin. You mentioned it's probably about 50, 60 cents above that current share price. But
I don't think
the
people
debit
would
that
be
you pay on this strategy,
the bears on
is
Tesla
your
would be
risk
so
on it.
bearish.
You can see the break even about
If it weren't for its
337
valuation.
and a half right
A lot
now.
of
It
it's
might
just
be a
because
little
of
bit
that.
higher if you pay 440.
Maybe they wouldn't be
But
bears if it was
you can see here from
valued
the risk
much
profile,
lower.
all the risk is on the upside above 347 and a half,
But they just
and above that
they
break
can't
even.
allow
You
it
see
in
that
their
little kicker
brain.
there, Kevin, right at or near that 320
be so
strike.
overvalued.
That tells you that, hey, I want that one standard
So it
deviation
makes them
move
not
to the
even like
downside,
the
and that's where this
company
trade
or
works
anything.
out best.
Right. What, you know, since we put this
Or
trade in,
gives them
you could
confirmation
adjust
bias
to
to it being
to 440, 445 call vertical if you want to take a
bad
little bit of that debit out of
stock.
it.
Yeah.
You know, always be willing to adjust the price, the strikes as you look at it. But certainly this is, the learning part here is, this is the vertical to finance the calendar spread, or in this case, the diagonal. It's the calendar spread with a vertical in there as well. So it's really an interesting trade. It's a vertical. It's a vertical with a calendar to make the diagonal. So it's a trade that's got 4 legs, but it's really just 2 trades. It's a diagonal and it's a short call calendar.
Yeah, I think that's a good point because you're using a neutral to bearish call vertical to help finance the bearish put diagonal on this particular 4-legged complex trade. So keep that in mind. You got some assignment risk on that short 342.5 strike call over the next 3 days, along with the short 320 strike put. But you've got that diagonal to kind of take care of it on that downside. So a good look at a complex trade here in Microsoft going into earnings. Pretty muted move expected in that one. I was pretty surprised, less than 4% move in that post-earnings. All right, let's take a quick break. When Kevin and I come back, we're going to be joined by Andy Swan from Likefolio for discussion on another stock that reports earnings. That's Visa. They'll have...
More fleshy there on SPY. Guy's a straight, doesn't he? Oh, I thought he bet first. Ace 10. What? Oh, did I have a straight? I didn't even check to have a straight there. I landed a straight. No, a pair. Oh, I did get lucky, yeah, because he had 2 pair also, but a pair of jacks came out. That was the 2 pair. That's true, that was kind of lucky. I thought he was Hollywood by saying a nice handle early. Act like he didn't have anything. He was gonna fold. Jump. I'm gonna take that last 1.1 million. Taking it. And queen. Pretty aggressive. Bet. Fair? Yeah, makes sense. Had nothing. Someone else took your chips for me. That is neat. a pillow. They're down, miss a move. Poker kind of helps me not overtrade also, I think. Sometimes it hurts me because it distracts me, but I'm in a trade. I have puts, so doing my best not to, I guess, close them also. But yeah, middle of the day is usually pretty slow, lower volume. But this setup, I mean, it broke this channel kind of middle of the day, 11:15, but chopped then till for an hour. So depending on when you entered and what you want to do with it. I really don't want to close any more of these puts until we get a gap fill. It is at lunch. Even though none of this is traded by people. But they just keep up with tradition. It's me.
The expected move.
You know, Andy, what I love about Visa, not necessarily the stock and its price, but the company, is the fact that they're boring. They're boring and massive, and they take a small slice out of everything, right? And they move along. And their gross margins, do you know their gross margins are almost 100%? Their gross margins. Their other margins are.
I don't know if it's officially over.
Being high,
It's me. I think there's still a chance actually. They're getting maybe some value in a new company.
They're not growing a lot, Andy. And what do you?
It is odd, but yeah. I mean, if you were still in it after it got delisted, and then after it went to expert market, like, it's not much different now. It's like, if you were hoping for it then, be just as hopeful now. That's how I see it.
Cautionary tale when your numbers for AXP are so dominant.
Yeah, well, the reason that the stock was hit on AXP was because they had to, or they increased the reserves that they had
I wouldn't
people who
wouldn't say it's over yet,
weren't
actually.
going to pay their bills in the future. So that's a risk that American Express has.
Until
that
it's
Visa does
fully
not.
over.
Visa just takes the money every single transaction, puts it into their own bank account, and says, "All right, you partner banks worry about whether or not the person is going to be able to pay this off." And so I think that makes Visa very unique. I think it makes it somewhat attractive.
I haven't had shares in a while.
Environment because you know they're not taking on that consumer debt
I
risk.
sold
and
barbecue at 23 cents. I tried to buy back in though, and it was like 8 cents, 7 cents, but it was already on the expert market, I guess, so I couldn't.
Defaults is very much in play.
So
and that's something Visa
whatever.
Really have to worry about. Although I don't
whatever
think
you guys get, if you get anything.
Having a lot of
just have
trouble
to survive off of your donations when you're all multi-billionaires.
American Express is hitting with the right customers in terms of driving that growth. That one-time adjustment, I think, to their reserves is in the rearview mirror, and I think that would be the stock that I would look at.
Little bear flag building up here.
But I think both are decent choices here.
Global fintech market, Andy, I read some data today that is worth estimated about $165 billion today, forecast to grow to $400 billion by 2027. Does this open up opportunities, even with your data that you have? We just saw retail sales last week. The consumer is still relatively strong. We'll get a read on GDP on Thursday morning, first read on Q3 GDP. Can the consumer provide the lift for this company? Because even though credit card debt's rising, it doesn't seem like it's really slowing down the consumer at this point.
No, not yet. And everybody's just kind of waiting for that next shoe to drop. I feel like everybody's waiting for that. In the meantime, these companies keep posting pretty good numbers, and I think that's probably what will happen tomorrow. I think Visa will post pretty good numbers, but they'll have to show some caution and concern about the future, because that's what everybody has to do at this point in time. And so, the consumer, especially the North American and U.S. consumer, continues to show resilience. It's a group of people that historically has not been good to bet against, and so I think that's the case here.
All right, great stuff as always, Andy. Appreciate it. Thanks for the data.
Sure, he might have a straight.
All right, that's Andy Swan, co-founder at Likefolio, breaking down the Visa data. It seems like it's, to Andy's point, it's firm, but it's not.
I thought about raising it pre-flop. I did.
But if you look at a day-to-day
tell me my business,
on
devil
a
woman.
name like Visa, it's not like it's one of the more volatile
flop
names.
was pretty nice.
No. This is an incredibly interesting company to follow, because
I know when they disappear from brokers, it seems like it's officially over. I know.
Fact, there's some speculation they may have to lower some of the fees.
And some of the regulation that might be coming down on debit card swipes, where merchant pays fees.
Is
that might
too.
have to come down
Sometimes we'll raise.
Exactly.
If it's suited, I maybe would have raised it. But
that said, they have enormous amounts of free cash flow. They count on the U.S. consumer, which I think is still doing well. Retail sales tell us that. So my learning point, and this is going to be a bullish trade, kind of the opposite of what we did in Microsoft time. So the learning part of that is,
it's going to probably get close to filling, and then a big bounce for liquidity and earning theta and all that
to put on another
great stuff.
But this one is on the bullish side.
Yep.
That Microsoft is on the bearish side. This is the bullish side. So what I did, I looked at the chart. Look at that 200-day moving average around $231.
I was hoping you'd bring that up.
Oh, of course.
Because it's bounced off there. It hasn't been traded below or settled below its 200-day moving average for about 11 months.
Doesn't mean it can't.
No, not at all.
But that was the kind of the genesis of the short put vertical.
Okay.
I sold the 230, 220 short put vertical in the October 27th, just this week. So it'll be 3 days when this comes out. And then I used that to buy the Nov 3rd, Oct 27, same dates as the Microsoft trade, just one was bearish, one was bullish. This time, Tom, calendar spread. 242.5 calendar spread. And so here's the nice thing about this, Tom. Right now it's trading about $1.30 credit, right? Because I did kind of a big boy. I put the bulk of this trade is the short put vertical, right? It's a $10 short put vertical because of that support. Now, that could be your trade if that's all you want to do, that short put vertical. That's one trade. The call calendar, that's another trade. You could do one, the other, or combine them for a trade that gives you a little more upside, a little more theta, but trading about a 135, 140 credit.
I could have checked that.
We've got $1 credit.
I should have checked that actually. I didn't see the flush that came out there.
It's moved because the stock's moved down, so the short put vertical has expanded in price. But let's break this one down. In the October 27th weekly cycle, 3 days to expiration.
GME's doing all right, yeah.
Selling the 230
up
put,
5
buying
1/4.
the 220 put short.
Especially with SPY down.
$10 wide put
or
vertical,
I guess SPY's not down,
helping to finance the purchase of a 1 week wide
today.
call calendar. Buying the November 3rd, 242.5 strike call. Selling the October 27th, 242.5 strike call. We've got $1 credit. It's a little bit higher because the stock has moved down. But that $1 credit means your risk on this one is going to be about $900 per spread, because the width of that short put vertical below 220 minus the $1 credit that you collected. Even if it explodes above 255, 260, Kevin, you get to keep that $1 credit that you have if it goes above it. But this is a bullish example where you wanted to kind of grind higher. The option market's pricing in about a plus or minus $8, just about $8 move either way in the shares. So to the upside, that would be getting closer to that 242.5
no,
strike call. Break even about 228.70, so just below 229 if you collect $1 credit on this one. But even if the stock doesn't move, Kevin, it still might be in a good spot as long as it stays above.
Not moving with the R2K either.
Right?
That's right, because the put vertical is
some
big
of
enough.
Some of the small caps are doing pretty well though.
Where if it stays right here, it looks like
some of the risk
you're
on.
profitable by the end of the week in that part of the trade. It is a directional trade, though. It's long about 22, almost 23 deltas.
Got
Yep.
like,
You got some
all in
cyber
up,
risk on that short 230
Nikola,
put that you're short.
higher
and
shorted,
the short
risk
242.5
on
strike
ones.
call
Of
that
course, the crypto
expires
ones are up.
in 3 days, so keep that in mind
Top,
also. But a
Peloton.
good look at another four-legged spread, but this is the flip-flop opposite of the Microsoft example that we
slowest,
gave you.
meltiest
This one is
trade
an upside type of play
ever.
if you think this stock's going to grind higher. A combination of two strategies to create this four-legged spread to the upside. All right, Kev, we're going to take a quick break here. When we come back, we're going to take a look at another name in big tech. That's Alphabet. The stock of the search giant has risen about 57, 58% so far this.
Get a little fleshy flush here. Fill the gap on one candle. Oh, that's true. Today is actually T+2 from OPEX. That's funny. Not like it used to be. Dude, I folded. I think that's kind of irrelevant at this point. It's not like Friday was super bullish where we have all these options that were unhedged. So funny though. Probably on Tuesday sometimes.
as the underlying, as you know. But when you're trading options on an ETF, you're actually, if you have a call option, you're going to be delivered the ETF in itself, not actual physical Bitcoin. So I think the positive for the spot Bitcoin ETFs here is going to be the liquidity that it could add into the spot market in general. And then also it's going to be the reduction of roll fees. So we do have Bitcoin ETFs right now, but they are trading the futures, and rolling those contracts as they expire does become a little bit expensive. It eats into the returns on a month-to-month basis. So I think that's another reason why maybe some investors might be a little bit happy here, Kev. But one thing I would note, Bitcoin in itself, when you're looking at the futures contracts, it is a well-known contract that is out there, but if you look at the spreads, they're still fairly wide. I think we have maybe 20,000 contracts that have traded on the session at this point. If you're looking at the options on those contracts, they're even wider.
It's
and
even
I think
less.
that's also
right.
going to be, so I think that's also going to be a little bit of a problem when it comes to liquidity. Now, the spot Bitcoin ETFs, maybe they have a little bit of a tighter spread, but I'm not sure if you're going to see this huge influx in interest coming from the average retail trader like yourself or myself getting into these products. Might be a small sliver of the overall portfolio like we have seen in the past when it comes to crypto exposure and the average investor.
Yep, we'll continue to watch this story develop. Kev, see if anything comes out. Appreciate it. It's Kevin Green, Senior Markets Correspondent, breaking down the Bitcoin moves today. But now let's bring in George Tillis, Senior Markets Correspondent here on the network. George, we're talking Google parent Alphabet. They got about 92% share in search. Nearly 80% of the revenue comes from advertising. This thing's pushed back against a lot of people saying that Bing was going to make some inroads into their market share. And digital ad spend continues to be pretty robust, George.
It is. I think that's a key ingredient for Google, obviously. I think if you look at their basic monopoly over indexing of information, that still is something you have to consider when looking at Google. I know everyone's talking about ChatGPT and that AI competition, but essentially Google controls really the information that is utilized by artificial intelligence to create knowledge that people make queries of. So this is an important company still, and they're launching their own, or have launched their own Chat GPT version, Baird AI. So I think this is becoming an interesting play on a pure technology company that, by the way, doesn't really have exposure in the hardware or semiconductor space like companies like Apple do. So I think that's one of the reasons Google also has performed quite well over the past few months or so. It's trading near year-to-date highs, whereas some of the other Magnificent Seven tech stocks are not. So I think that's telling right there. Now, if you look at the earnings per share estimates, they're expecting $1.45, which is over 38% compared to the same quarter last year at $1.06, while sales are robust at 9.7% in terms of the estimates at $75.81 billion compared to $69 billion last year. And I think this is an interesting company from a valuation standpoint as well, considering, again, they actually had earnings or earnings growth contraction last year for the full year. They're expecting now close to 10% EBITDA growth for the full year, and it's trading around 24 times this year's earnings, but only 20 times next year's earnings. And I think we talked about this.
Dang, I thought that guy had a flush.
Months
That was
or so
sketchy.
ago, or a few months ago. It was actually the cheapest out of the
normally
entire
wouldn't have called
Magnificent
that,
Seven.
but
And if you look at it
might not
on a
have
PE
it.
ratio and even on a net income basis, it was cheap. And it may now be fully priced, considering, again, the estimates.
George, I'm going to keep this real tight. 78% of their $75 billion that they took in revenue last quarter was from ad sales. Is this a digital ad sales story? If those are good, then they're going to be okay. If not, then the stock could back off.
Absolutely. I mean, that's their core bread and butter. That's their core generation of revenue. If it comes in line, and again, maybe they adjust earnings estimates a little bit higher and revenue higher, I could see trade within that market maker move, which I believe is around $6 or so.
Yep. All right. Great backdrop here for Google parent Alphabet here going into earnings. Appreciate it, George. Have a good day. That's George Tillis, Senior Markets Correspondent. Kev, they've showed profitability in their Google Cloud services. They're number 3 behind AWS, behind Microsoft Azure. So they're making some inroads. They're growing that portion of their business. But as you mentioned, that's not what they're reliant on. They're reliant on search, digital advertising money. This is just another revenue generator.
The stats are so incredibly impressive by this company. How about, I'll read the stats to you. Ready? They collected 27% of the digital ad market in terms of revenue. That's not as much as you would think. How about this? They have 92% market share in search. Android, 71% of global mobile phones is they control. YouTube, 9.2% of daily TV viewers were YouTube. Think about that, more than Netflix.
Yep.
So they're dominant across the board, but it's digital ad spend.
Yeah, we'll have to look at some of those revenues as far as YouTube goes. Also, are they picking up subscribers?
Sold one
YouTube
more
TV?
there.
So I looked at a strategy here, Kev. Stock's up 56, 57% so far this year. It's had a good run. But I looked at a strategy that if you're comfortable owning the shares and implied volatility is elevated, but you give yourself a little bit more duration, not a pure earnings play. Because I went out to the November 17th, the monthly options, 24 days till expiration, so 3.5 weeks, and sold a slightly out of the money put. Now, it was more out of the money before we came on air, but now stocks are relatively flat. NASDAQ's actually red right now, so keep that in mind. But selling the 137 strike put. Now, we've got a $4 credit on here. It's trading closer to $4.50, $4.60. So that would take your break even down more. But if you sell that for a credit of $4, it takes your break even all the way down to $133 on this one. So you're giving yourself a cushion. It works either way, where you either are comfortable owning the shares if it goes down below your break even or below that short strike, which is the 137 strike, or you've got high implied volatility. You just want to collect some option premium where you think it's going to remain above 137 at expiration. Cash secured put here. You've got risk of about $13,300 to the downside. That's if the stock were to go to zero, so keep that in mind. But Kevin, a cash secured put to take that neutral to bullish stance where, hey, maybe it at least consolidates, maybe it goes higher, but hey, if it goes down, I'm comfortable owning the shares.
And you're short Vega, and implied volatility is going to come down.
Right.
So without a catastrophic move to the downside, this will probably do well. But there is risk, as you would know, right? It's along about 44 deltas right now. So you're collecting data, you're short Vega going into the event.
Yeah, I think the key thing with this type of strategy, you could do something near term as far as the October 27th options, but this is the November 17th. So I'm giving you an example that, hey, even if the stock does fall below 137, you're not hurt because you have 3.5 weeks till expiration. You have some assignment risk, obviously, until expiration on this one. But it takes advantage of, if the stock does go down, what if it rebounds over the next 3.5 weeks? I think that's key.
And you can roll that spread, that one option as well.
Yeah, if markets open, liquidity is provided, you do have that ability to adjust or close or roll that option strategy. But cash you can put there, neutral to bullish stance as an example. All right, Kev, that's going to do it for you and I today here on Fast Market. But stick around right here on the Schwab Network. Next Gen Investing is coming up.
I remember when I first started flying and we would experience turbulence, I would watch the flight attendants. If they're not nervous, then I'm not going to be nervous. Financially, I'm the flight attendant in that situation. The relief that comes over people once they know they've got a guide to help them through, I definitely feel privileged to be in that position.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Welcome to Schwab Network.
Daily live exclusive content tailored to today's investors.
Broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up-to-the-minute market insights.
Example trades and stock-specific analysis featuring the smartest minds in the business.
No politics.
No noise.
Analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
and on demand.
24/7, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere.
On any device for free.
Schwab Network, empowering every investor and trader
every market day.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next-gen investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network.
Welcome to Next Gen Investing. I'm Jenny Horn alongside Alex Coffey. Alex, we're seeing some green, although some of the strength today is starting to slip here as we're seeing Meta and Apple both down about 0.75%. So some of that initial strength off the open waning on the session.
So in recent weeks, we've talked about the days where the market was down, and we talked about it being and feeling about the best case scenario for bulls. It was the weak early mornings, the rally back to down small. This is the inverse of that. I would say this is as weak of an up day as we've seen it feels like in a while. Started out strong, had a strong day yesterday, and waning here intraday. So bears probably liking what they're seeing, but of course we still got green on the screen. So until it turns red, hard to not say that today's a good day for the markets.
And today sort of kicks off the full swing of earnings. We had several names reporting this morning. We also get several big names after the close. So as always in the show, we'll break it down with our upvote and downvote segment with a lot of these pre-market movers as far as earnings goes. Then we will go into our upvote and downvote. We'll chart and trade those upvotes, of course. And then we'll look at Microsoft, which does have earnings today after the close, alongside Alphabet's another major name reporting. And we'll discuss all things NVIDIA coming after Intel's strong hold on PCs and why that could be possibly shaking up the overall semiconductor industry later on. Last but not least, our under 30 name today, we'll look at GM as they did scrap their EV target, but did post some strong third quarter profits. So mixed picture, but shares are slightly lower on the session.
You know, you mentioned Microsoft. Of course, we'll talk about that on FOMO. You mentioned they're going to be reporting alongside Alphabet. And one has to wonder, Tana, to your point, how much of today's kind of wishy-washiness is because we're on edge for these big announcements, and they're not alone this week. We'll get Meta, of course, as well as Amazon. And those four names, if they go in one way together, if they're in sync, be it to the downside or the upside, that's going to set the score more than likely, or settle the score more than likely for the Bears and the Bulls.
I know, and right now after we just got Netflix and Tesla, which saw completely different reactions, it's like which camp will they fall into? I like the earnings scorecard. So far we have Netflix crushing it. Tesla gets about a D- at this point, based on stock reaction, of course.
Yeah, no doubt. And you start thinking about it, which company of those two feels more like some of these other major digital ad players? You'd have to think it's Netflix. I mean, Tesla is an impressive company. It does some good things. It's, of course, one of the favorites amongst retail traders. But how much in common does it have with Microsoft? Not that Netflix has a ton, but you can kind of say that there's maybe, if you imagine the Venn diagram, the circles might overlap a little bit more for Netflix. But time will tell. Who knows? All these names have had various, core, business things that are going well, things that are going bad, stock price performance year to date, weakness last year. They're all unique, and they're all potentially going to have unique reactions. But let's do upvote, downvote, not endorsements, not recommendations. A little bit different today. Sometimes we do earnings previews. Sometimes we do recaps. Sometimes they're, just news stories. today, it's entirely names that have already reported, and we're just assessing the damage or the good after the fact.
Mostly the good, I'll say, but there is a bit of a mixed picture here. We'll kick things off with RTX, which is formerly known as Raytheon. Now, they did swing to a third quarter loss due to some of these repair costs of around $1.53 a share from their microscopic contaminant parts that were found in Pratt & Whitney turbines, as well as some other one-time expenses. They lost $984 million in the third quarter, or 68 cents a share. A year ago, they earned about $1.4 billion, just to paint a picture of how different their year-over-year metrics look. Adjusted third quarter profit did come in slightly ahead of estimates, while revenue dropped 21% to $13.46 billion, including a charge of around $5.5 billion related to that previously disclosed Pratt powder metal matter. Now, analysts had expected revenue of around $18.6 billion, so analysts had not expected this revenue metric at all. Huge miss as far as that goes, but they did say their board has approved this $10 billion accelerated share repurchase program, and they also said they're selling their cybersecurity, intelligence, and services business within their Raytheon segment for around $1.3 billion. They did not name the buyer, but that, I think, then headlines the rest of the woes of their earnings, because I first looked at this stock, seeing it, pacing for their best day since November of 2020, and I was like, this earnings report wasn't objectively that strong, but I think the fact that they're breaking up parts of their business seen as positive.
Yeah, I always think missiles when I think this company, but you talked about all the other things that they have going on. Clearly seen as a positive thus far. Maybe it's a look ahead type of situation. Not as bad as expected in some ways, Jenny, but up 7.2%. I mean, it's hard to just shrug this one off regardless of what the numbers are.
Yeah, it's just
likes what they saw.
Absolutely, and Mark
Charles
also
Schwab,
likes what
Trader
they
TV
saw
or whatever.
Spotify, and I would say this name actually we could very closely correlate to Netflix as far as like monthly active users and subscribers, very similar business models, but they added about 6 million new paying subscribers during their third quarter, which was well over the 4 million the company had forecasted just a quarter ago. They projected adding 9 million now new paying subscribers.
I had to step
in the
away. I
fourth
didn't.
quarter, which topped
I closed that
what the
one
street had
before I
been
stepped
expecting
away and
around
figured
8
we'd
million.
probably bounce a
The
little bit.
company also did
Waiting to
predict
sell
they'd
the
be
rest.
ending the year with more than 600 million monthly active users, which is a mix of their paying
Get a double
subscribers
bottom or
and those listening for
maybe
free, and
break
as
through
well as
there.
their ad-supported tier. But the boost in
Maybe,
paid
but
subscribers
yeah, that gap got
is
filled.
notable, considering that they saw this price increase.
Right on the gap fill.
Which
Didn't even make it to
seem
that support.
translate into many cancellations. That bump of around 10% to the $9.99 monthly premium individual price, they've maintained for years, but clearly, again, didn't drive away customers. In fact, the timing of it almost made Spotify look like the hero, given that so many of their peers, like an Apple or Amazon, raised their prices more significantly on their music streaming offerings months earlier. So Spotify's bump to me seemed like something that was necessary. This is a company that kept prices the same for like a decade, something ridiculous. So that's to me my most used, my best monthly subscription fee is Spotify. To me, they could double it and I'd probably still pay it because it's just such a good deal. I recall the days of iTunes when you had to pay 99 cents and then $1.29 per song. Spotify is a great deal.
Yeah, I was
That's
on the
right, I remember
Spotify
that. It's
team
crazy.
as well until
Never paid
Verizon
that.
decided they were going to pay for Apple Music. I'll take free all day. Took a little clunky interface at first, but once you're used to it, there's no reason for me to go back. Even the exclusive podcasts and things on Spotify, none of those brands are big enough for me to want to even download Spotify for those apps. You can download podcasts so many places. It's a big time company. It's doing a lot of things, but it doesn't make any money. And so that's the big problem. Apple has Apple Music, and I don't know how often we talk about Apple Music when we talk about Apple. It's a small thing. That's a very big problem for Spotify. And it's just one of the million things, I guess, that Apple does.
What's amazing though? I have this theory, this is totally anecdotal, but that you can, the sound quality of Apple Music or anything that is Apple sounds better on iPhones and AirPods than Spotify does. I think there's something going on there. I need to do some research, but I'm convinced that the Apple Music sounds better.
I have no idea. That is anecdotal, and maybe you're right, but I think that's some sort of, there's probably litigation there if that's the case, but I doubt it. But I believe you. I believe you.
But nonetheless, Spotify is a quiet outperformer. It's up 114% this year. So just today, adding to that strength. Shares are up 144% from their 52-week low. Our next name today, though, a little bit of a different story. That's Coca-Cola, which has faltered about 12.5% here on the year. They did report third quarter sales growth of 8% on a year-over-year basis. This did beat estimates. Revenue performance did include a 2% growth in their concentrate sales and a 9% growth in their price and mix. Unit case volume rose 2%. Organic revenues increased by 11%. Gross profit also rose by about 12% to $7.3 billion, with a profit margin of 61%. Now, adjusted earnings did also beat expectations, and as far as outlook goes, they raised their fiscal organic revenue outlook from 8 to 9% to now 10 to 11%. All in all, really strong report out of Coca-Cola. We have seen such a mixed picture from so many of these consumer staples. And I will say, Oliver keeps talking about the Ozempic effect. Ever since that Walmart CEO did mention they were seeing actually an adverse effects from people changing their snacking habits, changing the way they grocery shop. This was having an impact on so many of these snack companies. But Coca-Cola, the upside is they are a pure beverage play, not like PepsiCo where they have that Frito-Lay segment. This is purely beverages, and also so many of their business and overall growth is tied to some of these major vendors. Think like sporting revenues, concerts. They are a huge provider of beverages to large venues. So as the return to venues has persisted, that's been a huge benefit to a name like Coca-Cola.
And this is about as good as you could ask if you're a Coca-Cola investor. Stock didn't go down. It's up small. These names just don't pop around as much on earnings. We talked about this yesterday. Compressed price levels with lower volatility, lower beta names, of which Coca-Cola falls into. But they're also, with that, becomes easier for analysts to kind of project how their revenues and their EPS will kind of turn out. Usually doesn't venture too far from the estimate. Again, slightly above. I think it's seen as clearly a win today. It has lost some of its steam to the upside intraday, so we'll monitor that. But I'm with you with this Ozempic thing. I've kind of raised my eyebrows at this from the beginning, but the reason I'm doing it is not because it won't have an impact. It's like $1,000 or something pretty absurd if you don't have it for its primary use case. At least that's what I've heard. So I don't know how many people just have that kind of spare change for some sort of appetite restricting drug or whatever it does. A gym membership, a little bit of extra effort, I think goes a long ways relative to that. But hey, maybe I'm wrong, and if it becomes commoditized, this could be a bigger problem for these companies.
That was exactly my point. There's such a niche amount of people that could afford $900 to $1,000 a month is how much it costs. You're correct. And we were talking about McDonald's, and I'm like, I just feel like they're not the same target demographic because, again, who is just affording an extra $12,000 a year on this weight loss drug? At least I am not. Wish I could. But our last name today here is Kimberly-Clark. Now, this name is the parent company to so many consumer brands. Think like Huggies, as well as Kleenex and Scott Tissues. Kleenex is almost one of those words where you use it as synonymously with every type of tissue. It's amazing that the brand power that it has. But they, again, raised their prices, helping to restore now their gross margins to pre-pandemic levels. Overall, though, the cost environment, their CFO said, remains mixed, with favorability in raw materials offset by these higher energy prices, currency headwinds, and higher labor costs. Adjusted per share earnings did come in around $1.74 versus the $1.60 expected. Sales rose 2%, and they did raise their full year guidance and now expect earnings growth, well above what they had previously disclosed, between 15 and 17%, up from 10 to 14%. You'd think this would be enough to lift shares, but again, the consumer staples space remains, right now, there are the clear winners and the clear losers. This name's down 12.5% here on the year, and the street did not like what they saw from this report, although I would say raising prices is typically a good thing for the company, less good news for us as consumers.
And in consumer staple fashion, not really moving all that much, down 2.5%. Now, granted, for a consumer staple, that could be perceived as a decent-sized move. But comparing it to the other two that we talked about today, we got RTX, formerly Raytheon, up almost 7%. You got Spotify up, just over 9%. So both the Coca-Cola as well as Kimberly-Clark really just not moving.
The long blazer, man, that's
I completely
easy.
agree. We'll look at some of those big
girls
moves
do.
and big moves to the upside that seem to be holding on.
Nice
the session
blazer,
despite
rolled up
some of the overall
sleeves.
market weakenings. We'll be diving into those upvotes, like Alex said, RTX as well as Spotify. Looking at some example trades as well as some key technical levels. Stick around. Next Gen Investing. We'll be right back.
All right, Gen I. close another one at the low if we retest it. Oh, if we got a flushy flush. Up and around here. $115.
Drop on earnings. Another big gap down right here. We had a huge problem there with a 7.8% gap down after disclosing a manufacturing flaw in some of their jet engine components. Then we were really in the depths here of despair, all the way down here to 68.56. Then right at that moment, we had the Israel-Hamas conflict came that it's a defense stock, so it gapped upward. Then another gap up on earnings. So really a kind of an interesting study in how important these gaps are, how they can impact anyone trading a name like this. We've got all kinds of event risk stuff here happening. But nonetheless, now to look at the more current situation here, we can see that we gapped up. We crossed above our yellow 21-day exponential moving average. We crossed above these old highs right here. Our 21-day EMA is starting to trend upward a little bit, so we've got some signs of improvement here. We did not cross above our 63-day EMA there in orange yet, though, so that's the obvious point to be watching to the upside. And we can see as well that our two longer-term moving averages, orange 63-day, purple 252-day, still trending down here. So the longer-term trend is still down, and it's kind of hard to get too excited about this after the absolute beating this stock has taken during the past few months here. So, the trend is down, but we are starting to improve a little bit. Today's gap up did help. It'll be interesting to see where things go in the coming months as, perhaps, who knows how long this situation with Israel and Hamas will go on. It could be a catalyst for a lot of these defense names.
Yeah, and Rick, I will say this is an ugly chart because the gaps, like you pointed out, the move up today, but still being in a downtrend. I mean, we are all over the place. So what are you seeing as far as RSI goes?
Not a ton to report on RSI here. Mainly the big thing is that you can see kind of the extent of how difficult the move was for the bulls here with these repeated and somewhat lengthy crossovers into the oversold area, typically regarded as a sign of weakness when you cross below that 30 threshold on the RSI. Today, though, things are much more bright. We crossed above that 50 midline that separates bullish and bearish momentum here. At the same time, we broke above a resistance level. So that's something that is a little bit of optimism there. You know, kind of a confirmatory move. That's what you use RSI to look for, is to confirm the price action, not the other way around, really. You know, it would be very backwards to start making a bunch of trading decisions based on moves in the RSI if price wasn't following suit the way you would want it to be. That would be kind of the tail wagging the dog, so to speak. So basically all we're seeing here today, move upward in price, move upward in RSI, shift from bearish to bullish momentum.
So at least we're seeing, you know, momentum and price match today, despite what is a pretty brutal looking chart. But now, as far as some key price levels on your radar, I imagine this is difficult technically. I think this chart is so interesting because we're all over the place, but I'm sure difficult to find then that support resistance here.
That's one of the reasons I like volume profile, this blue bar graph on the right side of the screen. This shows where the heavy trading activity is, and it's very obvious on this chart. You can see we've got our point of control here, the area of heaviest trading. Not really surprising that it's up where we had kind of the meat of the chart there around 97. We've got another spike in our volume node near 86, kind of taking us through the middle of this downward sloping channel, this very brief kind of little isolated price action between our two large gaps downward. Then we've got one more here around 73. So we can see that even though we were kind of making some movements all around between like 68 to 75 or so, the 73 level is the most important price area to the downside once we get below that 21-day exponential moving average. So that's the first point to look for support, that 21-day EMA, and then see if this trend line holds true. Beyond that, we've got our yearly lows all the way near 68.56. To the upside, this level right here, this red dashed line, 81.35, all the way back over there near you, Jenny, was a point where we bottomed out a couple times. We had another foray to the downside, kind of solidified right around that same point. That would be a point to look for some potential resistance. Also right here, I would be really interested to see if we can fill that gap near about the 83 level or so. That would be another key point to watch to the upside.
Missed an exit
Yeah,
there.
Reclaim some of these losses they saw a few quarters ago. I mean, good thing that the move today, obviously quite different than we saw. I believe that was a quarter ago when we saw that mass selling. But so now, when trading this name here, Alex, walk us through what you're thinking. At least we have RSI and we have price matching today, both moving to the upside, some bullish momentum. So then walk us through a more bullish leaning example trade.
Yeah, as Rick had mentioned, there was that gap in early to mid parts of September, and that 83 level really caught my eyes. Those who subscribe to sort of the gap theory and technical analysis would like to see that filled. That would target around 83. Bullish, optimistic positioning here with this reaction in earnings. We took a look at a bullish trade illustration looking at that 83 level. Now, if you went to the December monthlies, there was $5 wide strike availability. So I did adjust this to include a weekly option cycle on December 1st, allowing us to do single dollar wide strikes and really target that 83 level. So buying the December 1st 83 call, selling the November 17th monthly 83 call to create a call calendar spread, a time spread, horizontal spread, whatever you want to call it. And looking at it here, 25-cent debit. So this is a quite small trade when it comes to the actual risk associated with it, Jenny. 25 bucks, 25-cent debit. We know the drill. We want to move towards our strike, so customizable. This one, though, the logic pretty straightforward. Looking for that gap to be filled around 83.
Right, and I mean, obviously this also gives us some duration here. I can't believe we're even looking at December. I cannot speak on that. But now our next name today, Spotify, also making a sizable move to the upside on the session in reaction to some strong third quarter numbers. But the story is very different here, Rick, because this name has been a winner all year long. It hasn't necessarily been a straight shot up, as of course it is anything really a straight shot up, but it has been consistently moving to the upside.
Very strong performance since the start of 2023, though. We're up 115% from that point. And, you know, you're right. There's been some fluctuations up and down here. But for a while, it was a nice, consistent rise upward here, kind of culminating with this big spike up into the yearly highs near 182. Since then, things did kind of fall apart a little bit. We formed this kind of more triangular shape here where we had an uptrend going across the lows and really this more modest more shallow sloping uptrend here in white, but the blue line is what I'm more interested right now. And we have this competing downward trend line starting across those yearly highs and then the subsequent peaks here. We can see as well kind of trending sideways for a little bit there. Not a ton of net movement from maybe here to here. A lot of chop, kind of fluctuating around our yellow 21-day EMA. But since yesterday, we really had a strong move upward. We're continuing that move from yesterday. We crossed above our 63 and 21-day exponential moving averages. Left them far behind, really. Now we see that we have another interesting situation with gaps, much like our last chart. We had this little gap here that we've now filled, but we're backing off from that level here. So our moving averages are all trending up. Prices above all of them. We're having a strong move upward here. We broke through this downward trend line, but we are stalling out at a resistance point here. So it'll be interesting to see where we close today, if we can kind of muscle our way back above that 171 level and keep moving on to the upside.
Yeah, also a pretty major gap up in this name today. So now as far as RSI goes, what are you watching here? Because again, I'm not going to call this an ugly chart because at least we moved to the upside, but all over the place again.
Well, RSI is kind of a dud on both our charts today, not really giving us any clues, not really seeing a lot of notable divergence or anything like that. So I thought this would be a good example to illustrate how you can use trend lines on the RSI to help confirm what you're seeing in the price action. We had a pretty obvious trend line going across our highs on the RSI here. RSI mostly was staying above that 50 midline as well, except for a few little dips below it for the most part here. But now that trend line is broken. The trend line also crossed that midline here, so we went from bearish to bullish momentum, and we broke the trend line, and we broke the trend line in price. So kind of a nice situation for the bulls there. That's the kind of way you can use RSI to help confirm your trading decisions. Like I was talking about with our last chart, really. It's something that you use more to give yourself a little bit of extra credence with this type of move.
And like you always say, the importance of looking at multiple studies, multiple indicators to then form a conclusion instead of just, say, looking at RSI. Because like you said today, not necessarily super indicative of what we're seeing overall with price. But now as far as some support and resistance goes, what are you keeping on your radar?
Well, volume profile's not as much help on this one, unfortunately. We can see that the area of heavy trading in question is from about maybe 140 to about 160 or so. So we've got heavy trading around there. Our point of control right here, this red dashed line, or red solid line, comes in right around 148 or so. So we're moving from the heavy trading area to a light trading area. Beware of fast moving prices when this happens. There's not a lot of clear, well-defined areas based on volume profile to look for support or resistance here. So now that we've filled this gap, I mean, the 170, 118 level, that would be one area that I would really have my eye on heading into the close. But I mean, the obvious next point is just 182, the old highs, the yearly highs. That's the real point that we need to recapture and move beyond to continue this uptrend here. Otherwise, it's just going to, falter again and fizzle out if we don't make some strong closes above that level here. To the downside, we've got our old trend line coming in right around 160. Old resistance becomes new support and vice versa. So in this case, we'd be looking for potential for some, solidification around that area. Then our moving averages would be places to watch near about 153 through 156 or so.
And we did touch as high as 173 at the peak today, so only about $9 away from the high we've seen. So really nice chart of Spotify shares and almost a 10% move here on the session, but we will leave it there. Really great breakdown on the technicals. Rick Ducat, our chart master. So now trading this name here, Alex, again, leaning into some bullish price activity because obviously the shares were up almost 10% on the session.
Yeah, and if you're looking for a retest at that 180 or so level where this stock failed last time, this is a trade that would seek to benefit from that, but also utilizing that resistance point, Jenny, as a place where maybe if it does test that level, it doesn't go much or at all beyond it. And so looking at a skewed call butterfly, going out to December monthlies, we just had earnings. We don't have to worry about that for a while. Now, at the time, the stock was trading around 172.5, 173. So I was looking at this when the stock was near its highs. And those who have watched this program and other programming on our show often know that when we're looking at strategies that involve debits or buying premium, we try to get that break even near the current share price. Now, granted, at the time, that 173 break even for the 170, 180, 185 call butterfly on the $3 debit was pretty close to the current trading price. Now, the stock has slipped a little bit, so the prices may be a little bit off, but bear in mind and keep in mind that we were looking at it when the stock was a little bit more expensive at the time. So $300 in risk, and max profit is $700. Now, that only takes place at one point. That point is at 180. And the reason being is we have a $5 wide credit spread, the 180, 185 call vertical, and we also have a $10 wide call debit spread. Those converge at 180, so that's where that 700 comes from. Now, the most important piece to this, Jenny, if I were to kind of highlight it, is because of how it's structured, because it's skewed, there's no upside risk at all. So even if it goes through 185, it breaks through that resistance point and moves higher, because of how this is structured and priced, it would just level off at a theoretical max profit of 200 in that case. So no upside risk,
I'm closing
a
the rest of
bullish
those puts.
strategy, and
Dang.
one that seeks to benefit from a move right to
Didn't get the
180.
great exit.
And of course, the nice thing is no major catalyst ahead for either
Exited
of these
some at
names.
the
We
right
have that
price.
earnings event behind us, so shouldn't expect some massive
couldn't, I just
volatility,
step
although,
away.
of course, we could still see that given these markets,
Sucks.
but we'll leave it there. Coming up next, though, we'll look at a name that does still yet to report. That is Microsoft reporting today after the closing bell. We'll look at what to expect from their first quarter results later on, coming up next on Next Gen Investing.
Picked up some calls there. Was slow. I had to get on my other brokerage. I had to log in. I had to go through the 18 steps it takes on Fidelity. Out of trades on trading account. Red on it on the day. Less red than I was earlier, thankfully. Got whipsawed hardcore this morning. Pop on SPY. Going for a VWAP test.
Versus the street's estimate of 56 cents, and revenue also saw an increase of about 19.9% on a year-over-year basis. Now, if we're looking at GE Aerospace, the revenue actually grew around 25% on a year-over-year basis, and even GE Vernova, which is considered to be the renewable energy business, the wind turbines, things of that nature, they actually did see their revenue increase by 14.1% on a year-over-year basis, and that business has actually been struggling over the last couple of quarters. So we did see a little bit of a bright spot. When you're looking looking at total orders actually increased by 19% on a year-over-year basis. And when you're looking at GE Aerospace, the total orders actually grew by 34% on a year-over-year basis. Their free cash flow, once again, also beat the street's expectations. It doubled from a year ago. And so we did see them increase their guidance moving forward. Once again, we're continuing to see a lot of demand when it comes to aircraft engines. And that's also being reflected when you're looking at the supply chain. The parts are still on backlog for a lot of these engines. So even though we're seeing new orders, we're also seeing a little bit of a drag when it comes to trying to actually produce. But that's going to be, once again, a windfall for GE because there's not a lot of engine makers that are out there, and there's not really any engine makers that can be very interchangeable if you're looking at Boeing or any other type of manufacturers that you're working with here. So overall, a really good report, continuing to see strength to the upside. And once again, kind of going back to the fact that this stock is supposed to have a very low beta to the market as a whole. So when we are seeing these outsized moves to the upside, along with the fact that their risk-reward ratio, if you will, if you compare their business to maybe tech, is very low. So this is actually a really good report. Hopefully this continues for the future without any hiccups.
Yeah, and that raised guidance, I think, just shows their conviction not only in the current market environment, but then in the rest of the year, which of course is seen as a pretty major positive. I just couldn't believe this chart, that it has been such a consistent uptrend all year long. And I love to see GE, a name that, is sort of, I would say, associated maybe not with the most trendy of names, but making such a nice move to the upside. So we'll leave it there. Really great breakdown. Kevin Green, senior markets correspondent here for the network. Now I'd like to bring in Alex, and it's time for FOMO. So we are talking Microsoft, which does have
Kind of
earnings
rejecting
today
the
for the closing
support
bell,
from earlier
alongside
today.
Alphabet.
Not
Now,
very
what
good
was
looking for the
interesting is
bulls.
last quarter, I believe it was Alphabet that was the big winner. Microsoft wasn't necessarily a loser, but didn't see the same favorable price activity. So now I have to see if they can have the comeback, as I do tend to compare the two, just given their race in terms of the AI right now frenzy.
Yeah, they have some, of course, businesses that are somewhat
130.
correlated with the cloud perspective, AI, of course, in focus.
Here to find
But
support
Microsoft's
on
got so
that
many other
breakout.
things too, from a hardware standpoint, from a software standpoint, that really doesn't particularly overlap with Alphabet all that much, particularly when you think about Microsoft and its kind of associations with the corporate world and all the different technologies that are integrated there, and hardware as well. Now, Microsoft is interesting from a kind of reaction to earnings standpoint. The recent few years, and really this goes back to last year primarily, this is a name that has basically followed the playbook of releasing the numbers for the quarter, and then about an hour later has a conference call where it provides guidance and kind of explains the numbers. What I would caution is that first reaction hasn't always been the ultimate reaction, because the conference call has sort of, in the end, shaped the reaction and the direction of the move. We've had 2 or 3 times in 2022 where the stock gapped down quite tremendously, and then the company's executives and leadership teams were able to provide guidance, provide kind of commentary around the numbers that they printed for earnings, and that actually undid to even move some of those stocks higher after having some pretty poor performance. So that would be sort of my note, would just be wait till maybe the morning of course, to really know what's going, because this has been a stock that first reaction has not been the case.
That's a really good point. We've said before, it's almost like there's 2 catalysts. There's the earnings themselves, the report itself, and then there's the earnings call, which, as we know from Tesla, actually was it to the downside when we heard that pessimistic tone from Elon Musk. But Microsoft does a really good job framing their earnings. Now, one thing that is highly in focus is their Azure segment, as that is their cloud. We have seen growth moderating in that segment, which has been a pain point for some investors, although it's not necessarily Microsoft specific. AWS has also seen some shrinking levels of growth as these clouds are just becoming more established. Now, there is the thinking they could face a more disconcerting investor in terms of AI, because some of that enthusiasm has faded a little bit. I was reading this report out of Wolf Research that said that, well, this quarter everyone was busy revising up their estimates for how big Copilot could be. It seems investors have tripped and fallen in the trough of AI disillusionment, questioning both the actual functionality as well as the profitability and the durability and sustainability behind that. Now, for Microsoft, that means that investors are basically focused in terms of what this Wolf Research analyst thinks. focus on the here and now, less about what is to come as far as their pipeline of AI products. Now, Copilot, I will say, very interesting tool. It sort of simplifies and makes it easier basically to use their various Office 365 tools like PowerPoint, for example. I've seen it in use and it is so beneficial. My sister was using this and was saying it's like a game changer as far as like presentations goes, but that's my only experience with it. But other analysts are saying that with this so many things in their pipeline, that could be enough to make the street enthusiastic. So two different ways of thinking. The here and now versus what's ahead for AI. We do know that right now Street is expecting about 25 to 26% growth for Azure in this December quarter, with around 300 basis points of that coming from AI, so that's coming. Right now for this quarter, though, all they need to do is post larger growth than what we saw on a year-over-year basis, and that would be breaking the trend because their cloud has been shrinking as far as growth, but again, still seeing healthy levels of growth. I think that that's being a little bit picky to say, it's not a 40% anymore. Well, of course, it's more established at this point. Like you said, though, there's other things going on. They just announced the final hurdle that has been cleared for their acquisition of Activision. Also, they have Xbox. I mean, they have so many things going on. It's like this is a company outside of just AI.
Yeah, and it's also, I think, important to note, too, that the comparable, so if you go from, let's say, $1 of revenue to $2, and that's 100% growth, to grow $1 again is only 50% growth on $2. So the growth number goes down, but that doesn't always mean that the amount that they're actually growing is going down that much. So it's important to think about how that all works when products become bigger and bigger. Like there's a limit to how much money there is. Like it can't into perpetuity just grow hundreds and hundreds of percents a quarter. And we're starting to see that there's saturation in this space and other players. From a trading standpoint, you kind of talked about it. There's sort of this lukewarm feeling right now with some of these names. AI maybe isn't moving the needle as much as it did. Names like NVIDIA have fallen, quite substantially off their highs. A name like Microsoft has fallen quite substantially off of its highs. But there's still a lot of things that are possibly going to be optimistic. The fact that Activision is in the clearinghouse for
I guess we'll find out. It's pretty aggressive.
And that deal is closed is a kind of cloud of uncertainty that's off
the
table now.
Oh my gosh, you remembered a two-pair.
So I looked at an Iron Condor neutral
strategy, premium strategy around nothing. This event, looking for it's going for the flush.
Kind of a boring reaction. Doesn't mean it has to be unchanged. It just needs to be less than expected for this potentially to be profitable. What we're looking at is just going out to Friday, selling the 307.5, 347.5 strangle, and then buying $5 wide wings. Those two levels would be basically encompassing the entire last quarter of trading. So it's going to need this name to break out of its most recent range, kind of retest some levels that we haven't seen since basically the last earnings a quarter ago. So with this, if we're able to collect $1 on this, it'd be $400 in risk for $100 in profit. Straightforward risk profile, looks kind of like a plateau. It's between our short strikes, we can make max profit. It's outside our long strikes. It's likely that max loss will be in play. You can only lose in one way or the other because the stock can only be in one place at a time. Break even, simply subtract the $1 from the short put, get 306.5, add it to the short call, get 348.5. So a $42 wide window of potential profitability with just less than a handful of days till expiration. You can only really ever do this in really volatile names or when there's an earnings announcement. And so that's, of course, what we have here with 61% implied volatility in the near-term expiration and a market maker move of just under $14 a share.
I was going to say, so this does consider the fact that we could see a move outside of what the options market is pricing in at around, like you said, just under around $13 here. So it does consider the fact that typically with these names, I feel like we do experience some volatility. So we'll be obviously focus on those numbers today after the closing bell. Now, coming up next, though, we will not stray too far from our AI conversation. We're talking NVIDIA as it takes on Intel, although Intel shares don't seem to care too much. They're up over 1%, while NVIDIA's slightly higher on the session. We'll discuss that story with Renita Young coming up next.
Saw a couple of these calls at VWAP. All day. SPY really hasn't gone anywhere. I guess we did end up coming down. Relatively tight range though. Dude, did I just fold? How did I fold? With folded, what the heck? Nice.
Partnerships, alliances amongst the AI wars here as we got NVIDIA teaming up with ARM, a company at one point tried to buy.
You're right, it did. So here's the deal. NVIDIA, we know it's been a strong leader in the AI trade this year, right? But right now it's coming for Intel's position with personal computers. And so reports
15
say
minutes
that
to 2
NVIDIA
o'clock.
quietly started to design
SPY's almost
central
back to VWAP
processing
already.
units that would run off of Microsoft's Windows
just chopped
operating
VWAP
system.
chop till end of
Then they
day.
would use technology from ARM Holdings. And part of this is it's
What a
actually
choppy
part
day,
of
really.
Microsoft's effort to help chip companies build out ARM-based
Only like one
processors
real
for
trade.
Windows PCs. And they would join Qualcomm in its efforts to offer ARM-based Windows PCs. Now, Qualcomm's been making ARM-based chips for laptops since 2016. And NVIDIA is trying to do the same. Those chips are supposed to be sold as soon as 2025. But Deutsche Bank views this latest move as a positive catalyst for ARM shares, of course, especially since ARM has long had aspirations to penetrate the PC CPU market.
You know what's so interesting about this, them working with ARM, is I feel like this is like the relationship that just won't die, where we keep seeing them try to come together. And I remember the regulatory hurdles. We're still talking about ARM and NVIDIA, but this time obviously as separate companies. But I thought no one was using PCs. I thought that was the whole issue, is that there's no demand for PCs, there's no demand for hardware. This has plagued so many of these companies because this has been the weakest spot for now several quarters, and we keep waiting for the bottom that doesn't seem to come. So as far as competition in this space, what does that look like then? Because again, I keep hearing this weakness in PCs.
Spot on, and that's exactly what I was thinking when I was putting together my notes for this hit. You know, we talked about how the chip makers had been focusing more on AI and even mobile phones and had been running away from PCs. But right now we see a move toward it, because not only is NVIDIA looking to make ARM-based chips, but it's reports that AMD could also have some efforts. And so their efforts together could really shake up this PC industry that Intel dominated. And it's also under pressure from Apple. You can't forget about Apple, because it started creating its own custom Mac chips, right? And they have better battery life for the computers. They give them better battery life. They have faster performance than their rival chips that use even more energy. And so Deutsche Bank says that this whole competitive situation is really intense in the PC market, and it's rising.
A couple things I want to add just for context. I think the clear reaction that you'd expect to see would be Intel lower on this. Whether or not in the end it will benefit NVIDIA to what extent, I think is unknown. You mentioned AMD, ARM, of course, involved in this conversation to some extent as well. And you don't see that today. However, this news broke yesterday around 3 o'clock Eastern time before the market closed, and you will see a gap down in Intel on the chart as you go back a little bit further in time. So it did impact Intel as the stock fell from about 34.60 down to a low of 33.39. It has clawed back a little bit from there. So it did impact the stock. And this to me is just a situation where these bigger players in the space right now are the ones that are competing at a very efficient rate, are striking an enemy or an opponent when they're weak. Intel struggled for 5-6 years now, and names like NVIDIA that have seemingly made every right decision are coming after it.
They are, and so a point of, I don't know, a caveat, I should say. Deutsche Bank says that any meaningful shifts away from Intel still looks to be several years out, should this even occur in the first place. So they're pretty positive on Intel maintaining its position, but I don't know, these competitors are really, really coming for Intel.
Yeah, the real winner today is ARM, up 3.5%. Well, NVIDIA is not doing anything. ARM is making a nice move to the upside, but that name is also volatile since it's relatively new. But we will leave there. Really great breakdown on what is an interesting story developing in the overall CPU world and, of course, AI world. But now coming up next, it's time for Under 30. We are talking GM. Shares are down about 1% on news. They are scrapping a lot of their EV targets. George Tills will have more on that story for us coming up next.
Oh, look at that. Liquor's up 12%. How strange. JetBlue down 4.3.
look going forward. But if you look at the report, just from a top line standpoint, it was actually pretty good. They came in at $2.28 a share in terms of earnings, and that beat the estimate of $1.84 by quite a bit. So that was a slight increase compared to the $2.25 they earned last year. It was about a 1.3% increase. Now, sales also came in slightly ahead of expectations at around $44.13 billion, and that was higher by 5.3%. But I think, we have to consider, GM, what's going on. One, obviously, prices of vehicles are quite high. Financing costs are quite high as well. I think that's from a macro-centric standpoint weighing on the stock or the company as a whole. And then you've got endogenous factors that are impacting primarily U.S. based companies from the UAW strikes. That's GM, Ford, and Stellantis. And then at the same time, even if you look at some of their technology units, like their Cruise division, which is essentially their autonomous driving division, they actually continue to lose money, but they lost more money this quarter than last at around $732 million of a loss year over year. Now, stocks can get cheaper. We talk about this all the time, and we talked about GM in a trading range, and the lower boundary of that trading range was around $30 or $31. It's below that. And if you look at where we talked about it last time, it was trading around 5.5 times forward earnings, and that was cheap compared to its historical averages, cheaps on a relative basis, an absolute basis, but it's getting cheaper. And the reason being is, if you look at 2023's earnings estimates at $7.49, that's higher, of course, sequentially year over year. But if you look at 2024, they actually are estimating around $6.85. That's lower next year than last year. And so therefore, the forward multiple is getting cheaper alongside the price. And the forward multiple now is below 4 times, which is really cheap. But here's the thing. If you have negative earnings growth, in this case, negative 4.5% earnings growth, that low multiples don't mean anything. They're value traps.
George, real quick here, just kind of final thoughts. Is this kind of a situation where all of these big three automakers here in the U.S. are sort of almost like, I don't want to oversimplify it, but kind of like decaying assets, if you will, until these strikes are resolved? It's just almost like there's a ceiling, a cap being held on it, all else equal, absent any positive updates.
Well, I think if the strikes, there's some resolution to the strike, you're obviously going to see a relief rally. I think that's going to be a positive catalyst for all these three, because there's going to be more visibility on the earnings estimates going forward. So it'll be a relief rally. It's cheap. It's cheap right now as a stock, but like I said, it can get cheaper. And just use the price action too. Just use weekly charts. If you look at that $30 to $31 level, if it closes above that on a consecutive weekly basis, that might demonstrate a major trend reversal. So it's not a decaying asset, a terminal decaying asset. I think it's just structurally challenged right now because of the macro headwinds, interest rates, vehicle prices, and then of course the idiosyncratic issues associated with high cost and labor strikes.
Yeah, right. And as far as like employment goes, I mean, this is a huge portion of these companies' workforces that just hasn't been employed for over a month at this point. So they need to reach a resolution. That would, I think, be a huge benefit, obviously not just to GM, but also to Ford, Stellantis, and really the overall auto space. We will leave it there. Really great breakdown. George Tillis, Senior Markets Correspondent here for the network. That also does it for Alex and myself for Next Gen Investing. Coming up next, we have the watch list.
Almost 2 o'clock. I've just been consolidating here under BWAP, button up against the support from earlier today. Finding that it's resistant so far. Breaks it. GME's up 4.8%. $2. Let's see, 5.25. Liquor's up 12.8. Couple more 1,000% to go. Mullins up 31. Closed out of those calls. Here's your little bounce on it.
Energy, the only losing sector there. Meanwhile, the Dow Jones Industrial Average up about 127 points. That's also about 0.4%. NASDAQ up a little bit more than that, up 0.5% ahead of a big week for earnings, especially amongst big tech. Let's take a look at some of the futures products now. We are looking at a higher dollar, lower gold, basically flat gold. Crude oil also lower, down about 2%, trading around $83.90 a barrel. And take a look at Bitcoin, well off the 35,000 level, but still trading with pretty impressive gains, up 7.5%, 33,850. For some of the biggest stories in the markets, let's welcome in Kevin Hanks, senior equities contributor here at Schwab Network. So Kevin, I know you're taking a look at a few of the movers after earnings today, Verizon being first, seeing a huge pop for Verizon shares, which otherwise were pretty beaten down. What has investors so upbeat?
Yeah, this is one of those names, Caroline, having a really nice day. I've got it up about 8.5% as we get to the 1 o'clock Chicago time hour, 2 o'clock Eastern, and it's on pretty strong third quarter performance and an improved free cash outlook, Caroline. Here's some of the numbers. I made $1.22 a share. That easily beat the 118 estimate. Sales, actually $33.34 billion. That's a beat on expectations of $33.25, even though it was down 2.6% year over year. But some of the additions, Caroline, the quarter marked 434,000 total broadband net additions. That's a really good number for Verizon, and all this led to $1 billion, $18 billion they're projecting in free cash flow. That's $1 billion more than they were expecting in earlier guidance. So real good numbers out of Verizon. Other numbers, strong demand for fixed wireless and field broadband users. That's up 21% year over year. So real shocking good news out of Verizon. The stock up, like I said, about 8.5%.
Yeah, investors clearly cheering that better than expected report. We're also seeing a big pop in General Electric. We talked on Fast Market how this is a much different company than you remember back in the day. But what stood out in that report to you, Kev?
Yes, I have a long relationship with GE, trading it in pits in Chicago for many years. And their earnings, this smaller, new company that GE is focusing on the key parts of their business, and it's GE jet engines, it's aerospace that really drove GE's earnings here. Now, they're spinning off GE Verona at the beginning of 2024, but the numbers, 82 cents a share versus 56 estimated. The revenue, the sales of $16.5 billion versus 15.7 expected. Revenue, $17.3 billion. That's up 20%, easily beating a number about $15.5 billion. So really good, solid numbers. And like I said, it is the jet engines, it's GE Aerospace, and jet engines and services on jet engines that really drove their earnings. And this is a company that continues to recover from the dramatic restructuring that it did under the new CEO. So a nice bounce here. Obviously, if you're a long-term GE shareholder, not anywhere near the all-time highs, but still a solid day for GE, up about 6.4%, Caroline.
And we got some timeline or some clarity on the timeline for when it's going to actually split into the two companies, second quarter of 2024. So some clarity around that as well. Kevin Hanks, thanks so much for breaking down those top stories for us. Now let's take a look at the bigger picture with James Locke, co-founder of Pool Locke Associates. James, thanks so much for joining the show.
Hey, Caroline, good to be here.
So we're talking about some of the market strength that we're seeing today. All of the major indices higher, although lower on the month. It's been kind of a continuation of the September rockiness, but I think today it certainly helps that 10-year yield is off the highs of the 5% level. Just curious, when you think about bond yields, do you think that we've seen the top end of the range, and what are the implications if we haven't?
Yeah, so let's put it this way: we're certainly closer to the top than we are to the bottom, right? And that's for sure. And that's a lot of the information we're passing on to our clients as well, is how do you position, for the future. But really, a lot of this revolves around the Fed and, their kind of constant talk of higher for longer, and that rate outlook is really driving this kind of painful repricing of the yield curve. We're seeing rates rising across that middle and long end, and the expectations for short end cuts is putting more, getting less and less, is putting more stress on the banking system, housing markets, and those are two huge catalysts for economic growth. We see wage and employment and consumption are generally growing, but slowing. That's good news at the very least. But we get this constant, reversal of good news is bad news. We get good news, and then all of a sudden markets sell off. Why? Because we're afraid the Fed's going to, raise rates. Plus, globally, outside of the U.S., there's still stubborn inflation, multiple wars now, and softening demand in Europe and China weighing on global demand. So we're going to continue to see bouncing around, through the rest of October into November. The people are concerned with U.S. government debt on top of that. So, there's unknowns out there.
Okay, so I want to break all of this down in terms of where the market's going, how to position for the future, but sticking with the Fed for just a second. The Fed kicks off its next policy meeting in about a week. Do you think the Fed is actually done hiking at this point? And could this week's GDP number or the core PCE, which we know is their preferred inflation gauge, change the course at all?
So I do think the Fed is done hiking. I guess a lot of it, we got a lot of earnings coming out, like you said. The inflation number is going to play a factor in that. But I think the Fed is done, and I think they're just talking tough because they have changed their tune a little bit. In the past, we would have seen them, kind of overkill and kill the patient, so to speak, and send us into recession. Fed has caused more recessions than they have saved us from. But they're actually doing a fairly good job at holding off. So I'm going to be cautiously optimistic.
Looking to maybe get back into the calls.
And just keep this tough talk, which is going to result in volatility and bouncing around, because we're still never sure until the Fed, sits on something. So I actually don't see rate changes happening
through the liquidity
until late 2024. If at all.
That's real quick. It was breaking down.
That's actually, if they can do that and they can hold that, that's going to be really good for the economy in the long run, because ultimately a little bit of inflation is far better than going through a recession, right? So these are the things that we're talking with our clients about. Now, how do you take advantage of it is, what you ask. Ultimately, with these high interest rate parts that are times, savers are going to benefit, right? Pushing your duration out a little bit. You can run yourself up the risk scale a little bit into like maybe some CCC debt, but you have to be selective in what you're purchasing.
Okay, so let's talk about positioning for the future, given the higher rate environment, and given I was taking a look, your S&P year-end price target is 4,100. So given the fact that we could be lower than current levels by the end of this year, how are you advising your clients? Are stocks or bonds the better place to be?
I would lean into the bond and bond-like, let's just call it that way, investments, because, like I said, we're closer to the high in the interest rates than we are to the low. And so on that side, I feel like we have more ability for growth as interest rates stay the same or potentially drop. On the stock side, what we're going to see is lower highs and lower lows as we kind of bounce along in a channel through the end of the year for sure. And there's going to have to be some sort of catalyst that's going to, bounce us out of this, be it good or bad. If the Fed starts hiking up rates again out of nowhere, well, guess what? We're going to go the wrong way. If they can hold off and we continue to have, good earnings numbers from companies, and we don't see inflation at least running rampant, well, then you can start expecting next year to move in a positive direction. But right now, I expect us to, be at 4,100 or around by December 31st, and see that. We're probably going to see the 10-year bond hit 5.25 somewhere. I know we got over that 5. That's kind of that 5 is that magic number. Now we creep back down underneath it, but it can easily swing back up, and we might hit 5.25.
All right, so we'll keep our eyes on that. So you're leaning into bonds, but you do have a few stock picks that I want to run through. First up, Levi Strauss. Shares up about 1% right now, but this is a loser on the year, down about 9%. So is this a value play? You're buying the dip?
Yep, it's definitely a value play. They deleveraged themselves from the family-controlled back in 2019. And now they're expanding in the right direction. They're expanding their women's lines. They purchased the Beyond Yoga brand. They have a nice dividend, 3.6% dividend, expecting earnings per share to grow over 20% in 2024 and 14% in 2025. So it's going, the metrics, the analytics look good as far as this stock paying a nice dividend in this high rate environment and having upside potential, right? So they're basically also moving into direct to consumer sales, right? Which is going to push their model even further. So, over a 5-year period, there's significant capital gain as well as the current large dividend, and we're seeing even a 2% pop in the, more in dividend as well on top of that. So, Levi is something that we, like you said, buy the dip. It's not something we're trying to flip out tomorrow, but it definitely has a lot of benefits.
Okay, and we're just about out of time, but I want to squeeze in this last pick, KVUE. Of course, it was J&J's consumer health division, spun off here at the NYSE back in May. Is this just a Staples play to be slow and steady wins the race type of thing?
Yeah, absolutely. They have no exposure to any of the talc litigation, all that sort of stuff. Nice dividend. It's in the S&P 500 already. That's going to help it. I think it's undervalued by somewhere in the 10 to 20% compared to its peers. So there's some upside potential there with a nice dividend.
All right. Well, we appreciate those picks and your insights. James Locke, Pool Locke Associates, thank you so much.
Thank you.
Have a good one. Coming up next, it's Technical Tuesday. CRISPR Therapeutics hit a 52-week low last week. Kevin Horner will take us through the chart and preview what could be next for the stock. Stay with us on Schwab Network.
Stitch Fix is up 14.5%. I could spread my chips.
On this are between 465 and 467. So a lot of traders looked at that breakout and took advantage of it. We rallied for about a week, added 8% to the upside, and it has now returned to the level from which it broke. And there's a 50-day moving average down beneath us has kind of been working as support as well. Some might prefer a 100-day moving average, but the concept is a sound one that many traders like, and that is the idea that you get a stock that breaks out, it comes back to the breakout level, tests, holds support, makes a higher low in price, higher low than the last low we made. And that will give new traders an opportunity to say, all right, we've broken, now we've validated a test of support, now we can re-enter the uptrend. And that's what gives traders some comfort here, is that if it were to break, say, the low it created yesterday or move below the 50-day moving average, some traders would just move on and say they missed that opportunity. But it is a nice setup from a risk to reward standpoint for the bulls. Bears, you're just going to have to be patient on this one. Unfortunately, a couple of breaks below the 50-day moving average would be necessary for bears to have a lot of hope.
All right, and I know it's not technically speaking, but I was just taking a look. The median price target on Wall Street, which would be more obviously based on fundamentals, 502.50. So pretty optimistic on that front as well. Kevin Horner, Charles Schwab, thanks so much.
Thanks, Caroline.
All right, Bitcoin hit 35,000 today for the first time this year on more speculation about a possible Bitcoin spot ETF. We'll break down the implications of this move and more when we come back.
Picking up some calls there again. Leaving break VWAP. Break this resistance up here. There's VWAP. This is kind of a longer term trend line I drew here, so see how it does, how it reacts up there. Makes it. make some profits on those. Trading tomorrow's this late in the day. Very well be up chop. Last hour and a half.
To 100,000, some of these really lofty highs that we used to hear about?
Well, Caroline, I'm not big on giving price targets. I've said before, though, on whether it's on X or on LinkedIn or wherever I've been, I could see it doubling that day. Excuse me, I could see Bitcoin doubling that day. And again, the reason is just simple supply and demand. So many people aren't going to be willing to sell their Bitcoin for a 10% or 20% increase when they know that there's potentially hundreds of millions or billions of dollars coming into these spot ETFs, and they all have to go buy Bitcoin as well. So I could see a doubling of the price. Again, I'm not giving a price target. I'm not telling you, from a financial perspective what to go do, but I don't think that's out of the realm of possibility to see a doubling of the price the day that the ETFs are announced, because again, I don't think there will be one ETF approved. I think there will be several ETFs approved, and they are all going to have to, have enough Bitcoin to satisfy the demand.
All right. Well, doubling of 33,500 would get us basically in line, maybe above the old high. So I can sort of do the math here, but just in terms of other cryptocurrencies,
That was straight.
it seems like it's Bitcoin and then everything else. We used to talk more about Ether and Cardano and Solana and all of those, but are there any other cryptocurrencies that we should be having on our radar right now?
I think ETH should be on the radar as well, at least. And the reason is because
That's
some
so
companies
straight.
have already filed ETH
damn.
spot ETF applications. We saw Grayscale, I think yesterday, submitted the application to probably eventually
Pop there.
convert their ETH trust into the ETH spot ETF. So I think once there's a Bitcoin spot ETF approval, there will likely be an ETH spot ETF approval shortly thereafter. So I think that's probably another one to look at. And as we've seen, Caroline, as Bitcoin goes, so much of crypto goes. ETH is by far and away the second largest, the second most used, and we're seeing quite a bit of actual adoption of the Ethereum network. So it's actual use cases that are happening. We've heard the likes of Larry Fink talking about how BlackRock is going to tokenize assets, and they might be using the Ethereum network. We've seen PayPal with their stablecoin on Ethereum. So we're actually seeing the use cases on the Ethereum network, and that can also significantly drive the value of Ether. So between a potential spot ETF on ETH, plus the growing adoption, the growing use cases of,
Saw a couple there.
the Ethereum network, I think we should see some more demand for ETH in the near future as well.
All right. Well, we'll have to wait and see. Adam Blumberg of Interaxis, thanks so much for joining us.
Thanks so much for having me on, Caroline.
All right, still ahead, we'll take a closer look at what to expect when Microsoft and Alphabet report earnings after the closing bell. As we head to break, let's take a look at some of today's biggest winners and losers in the S&P 500.
Nice, I like that break. Like that break. Makes me want to even add. I went in heavy down here, so probably pretty good. just gotta wait for the trade. It's crazy, man. Today and yesterday. Hold a couple more.
Me the same way that Alphabet and Microsoft do. So you're spot on there. And there's a reason that these names garner so much of our attention, as Microsoft is the second largest company as far as market cap in the world. Alphabet is the fourth. So these are massive, massive companies. But one concern for both of these names is that a lot of this AI frenzy has waned a little bit, as it seems like this is going to be more of a wait and see story, less an immediate benefit for both Microsoft as well as Alphabet shareholders. So that is something that's been brought to front attention now for Microsoft shares, as Wolf Research did recently say that last quarter everyone was busy revising up their estimates for how big Copilot could be. It does seem to be a question, though, if investors have tripped and fallen into the trough of AI disillusionment, questioning both the actual functionality, the profitability, and ultimately the durable and sustainable competitive advantage. Now, Copilot is really cool. It utilizes a lot of Microsoft's 365 offerings. It's a way to make like PowerPoints and Word docs a lot easier. I have seen this at use firsthand, and it is very cool. But again, a lot of expectations, also expectations riding on Azure and its cloud growth. We have seen that segment consistently grow less and less over the last few years. That is not a Microsoft specific trend, but it is something that is going to be heavily in focus if they can see some of that growth bounce back. Although we're also seeing that with AWS. So again, it's not a Microsoft specific story. Now, when looking at the analyst expectations, Street loves this name. We have 89% of all analysts rating it at a buy. Average price target is around $392 a share. That clearly implies some upside. Microsoft, though, in terms of stock performance, is a little bit lackluster. It's still outperforming the overall market, up 38% this year. But right now, looking a little lackluster when you naturally compare it to Alphabet. But we have gotten so many pieces of good news for them as of late. I mean, finally closing that Activision acquisition was huge, obviously. And finally, we can put that to rest with that last regulatory hurdle going through. So that was a huge win. This is a massive company, again, second largest as far as market cap in the world. So we'll be watching these numbers very closely.
All right, and Jenny, I'm constantly fighting with Microsoft Office, so I could use some Copilot help. Maybe I have to turn to AI to actually get my Outlook issues solved. But speaking of my preferred email and workspace company, Alphabet, Google, is also reporting after the close. Taking a look at shares, they're up even more. They're up about 1.7% right now heading into this report. They've seen a more impressive year-to-date gain then Microsoft. What are the latest street projections for Alphabet?
Yeah, and you know what's interesting is that this name was second in the AI arms race, right? Coming after we did see Microsoft's massive investment in OpenAI's ChatGPT. So they were seen as the late comer, but that has not been reflected in their stock price at all this year. I mean, we're up 57% year to date. They've also rallied about 6% now month to date. Earnings expected at around $1.45 a share on revenue of around, let's call it $76 billion. Just shy of that is what the street is pricing in. YouTube advertising revenue expected at around $7.8 billion. Google Cloud revenue $8.6 billion, and traffic acquisition costs $12.6 billion. Now, this company is projected to show a return to some of its double-digit revenue growth after 4 quarters of expansion in the single digits. The company's core advertising has weakened due to overall economic softening, but also the increased competition they're facing from TikTok. And during the third quarter, Alphabet did make some pretty major layoffs and various reorganization strategies. An estimated 40 to 45 workers within their news division specifically lost their jobs, while they laid off even more employees at their Waymo division. The company is continuing to resize after years of just really unprecedented growth. So that has been something that they have been pretty vocal about. But following, again, the launch of ChatGPT, they've also been racing to add various AI features. I will say they are also facing right now this Department of Justice antitrust trial that recently began, alleging that they basically monopolized the search engine market, which I would say, I know Microsoft has Bing, it does not come close to Alphabet. Google is my most used probably internet tool of all time. So I'm also excited, really quick before we go, is I'm excited to look at YouTube revenue, because this is to me the best way to watch sports. So for that reason, I'm excited to see how YouTube has grown, because it's NFL season right now. So that's a benefit, I'm sure.
All right, you lost me with sports on YouTube, but certainly agree with the search browser. Jenny Horn, always a pleasure. Thanks so much.
Thanks, Caroline.
All right, let's continue the conversation with Rebecca Walzer, president of Walzer Wealth Management. She joins me now here at the desk. Rebecca, thanks so much for joining us.
Thanks for having me, Caroline. Great to be here
in person.
Thank you.
So we were just gearing up for the big reports after the bell today with Jenny Horn, and obviously big tech has really been a standout for most of the year. Do you think that's going to be the case for earnings season as well? Is it going to be big tech or the winners?
So far, I don't see anything that's going to create an outlier this quarter. And we know that Microsoft obviously up to year to date over 37%, Google even more, so Alphabet. So, we're seeing that big tech has carried. But, obviously, Caroline, I'm really excited about this morning. The earnings season's beginning in earnest with GE having a double beat, 3M having a double beat. GM having just beat. I think GM had one miss, but the point is that it's we're seeing more breadth now. It's going to the industrials. It's not just in the tech. So I can't imagine with seeing positive from industrials in this environment that we've had, in this macro environment that we've had since 2022, that we're going to have any surprises on the tech side.
But here's the question: is it the bar has been lowered enough that these companies are able to beat, or is it they're actually surprising to the upside because they're in a strong environment here?
Well, I think it's both, actually. I think you're 100% right. We could definitely make the case that as they saw that cost of capital was getting more expensive, and then that their savings were going to have to be leveraged, and that we were having banking, lending tightening and going into recessionary times, that's always happening, then you could see, they lowered expectations, absolutely. But even from those lowered expectations, we are having beats that are surprising. And so I do think it's both. I think they've handled it well. The business environment has handled it very well. And also, we're really benefiting from both the German manufacturing crisis and the EU and Asia Pacific, and all of those dollars from those investors are saying, where's the money, where can I get it? And a strong dollar is pulling those investments over, so that's also really helping.
Okay. Microsoft and Alphabet, obviously AI is going to be really the name of the game with those companies. But at what point do you think the market is going to be more show me, don't tell me? How much do they want to see the strength of AI reflected in the numbers?
I think it's going to be fast, because look, Caroline, if you look at Microsoft with OpenAI, right, and ChatGPT, they are already seeing such an increase in downloads and people starting to use to write their text messages and their emails. And so the monetization piece has to come. But as far as actual breadth of acceptance, it's becoming pretty mainstream, and it's going to be its first to its market. It's going to, Google and the others are going to have to play catch up, because I'm not saying that they can't, but I am just saying that this is first to market and it is becoming widely distributed globally now. People are starting to leverage it, so it's the monetization of it, just like Facebook and social media forever. How do we monetize this? That will come, but I think that people are very keenly interested in what's going on with AI.
And NVIDIA, obviously the one to beat this year in terms of the AI play.
Unbelievable.
But now NVIDIA going after Intel in the PC chip market.
Yes.
So not necessarily just focused on AI, also now focused on PCs. How much market share do you think they can grab?
I mean, I think Intel has got its handful. NVIDIA has $16 billion of free cash. Their debt is only $9 billion, so they have so much potential. This is July of this year. This is after $10 billion of buybacks. This year they have another $3 billion that's authorized through the end of December, and they have another $25 billion that just got authorized by their board that has no expiration. So they have so much ability to raise and to invest, and they're going after the PC market, because what's happening, this is all stemming because Microsoft is trying to keep up with Apple. Apple started using these ARM-powered chips that save battery life, process AI processing better, and so Microsoft's like, oh, we want to keep up, and so they had an exclusive agreement with Qualcomm from 2016 but expires next year, 2024, and they're asking NVIDIA to step up and say, hey, start producing these chips for us. So that's a whole nother frontier for them.
So you started to talk about the breadth that we're seeing in terms of the earnings beat. Do you think that can expand into market outperformance here? Because that's been the one thing sort of missing from this market, is just overall breadth of the rally. Do you think that this earnings season will be a positive or negative catalyst for the market?
I think that it's going to be a positive because we have lowered expectations and we are seeing some really good, ingenuity in dealing with this terrible market that we've had. However, Carolyn, the fundamentals as far as the cost of capital and the free cash flow and unless you have a company that has such a positive amount of cash flow, an Apple, and you're just going to have to go back out into the market, and everything is so much more expensive. We can't pretend we're going to have the same growth factors when cost of capital is, 2.5x what it used to be for these companies.
So we had James Locke on earlier in the show. His S&P price target is 4,100 for year end. Is he being an optimist or a pessimist?
I think he could. I'm going to say that is
Closed
a
a couple
really
more of
good
those
price
calls.
point. I think that we will have a pullback because
15 minutes to power hour.
Okay, so how are you
See what we
investing?
get.
What would you buy right now?
Right now, I would say, because although the earnings season looks great and it makes you want to it gives me FOMO, right? Like what's happening? I still am thinking that the year end is going to, especially with the Middle East crisis situation, I'm going to say that we're still going to stay to the conservative side and be more on the commodity-based side, just to make sure that we're getting some safety and some growth.
So energy.
Yeah. Energy, metals, really safe types of things if we see the Middle East and these things really we've got Ukraine, we've got Taiwan. How much more can we take? And this is all on top of, all of these raises and the highest cost of capital we've had in, over a decade.
But are you surprised that geopolitical risk hasn't really had all that much of an impact?
Yes, but
why?
That's the danger though, Carolyn, because it hasn't, we're going to continue to assume that it won't. And that's what I see all the time, and Wall Street is blinded by the fact that we have been blessed. We shouldn't just assume that it's going to continue.
Okay. Energy, though, what's your call on a recession? Because if you're bullish on energy, is that because of just supply issues or also demand?
I think
Get a queen also.
be demand issues. If we're going to have a soft landing, we're going to have higher demand. We're going to be going back into a growth and expansion.
Played that pretty good.
We would
Nice
have
and
more
slow.
demand there. However, if we get to full-scale war, there's going to be such uncertainty that you're going to see a
I forgot what he had. I thought he had pocket
drop in activity, and the world is going
jacks,
to brace
tens,
for how it's
maybe
going to
kings.
resolve. So it's really going to depend on which way we really go here.
All right. Well, we really appreciate you breaking down your insights for us.
Thank you
Rebecca,
so much.
Thanks so much for joining me at the desk. That's Rebecca Walser of Walser Wealth Management. All right, still ahead, we'll bring in our panel to discuss General Motors' quarterly earnings report, what's next for GM and the Detroit automakers as the UAW strike continues. That and more after this.
Young lady who was
My browser's so laggy.
recently went through a divorce.
Great. Clubs and an ace. SPY's making RSI divergence. I'm wondering if I should get some swing calls. Considering it. Got full house on the flop. You're kidding me. Oh, dang it. You're kidding me. You're kidding me. A long time ago, the delicate tangles of his hair filled the emptiness of my hand. That same person said, "You're kidding me. You're kidding me." Yeah, I flopped a boat, doggy. Wasn't a couple more there. One of the price action days just seemed like choppy and almost even like low volume. It's just melted everywhere. I don't know if I'm just too hyped up or why it seemed that way. I'm half out of those calls I got down here. 9 minutes power hour.
Let's bring in Nishit Madlani, Senior Director, S&P Global Ratings. Nishit, thanks so much for joining the show. I don't know that I can hear you, but let's try. I'm going to just say that shares are under pressure right now, down more than 2%. I want to get your biggest takeaway from the quarterly numbers.
Not even trying.
All right, let's try this again. I think there might have been a mute issue here. Sorry, we're working it out right now. But just in case you couldn't hear me, just want to get your take on GM's
That's all you have to say.
Earnings. Shares are under pressure today, despite report to me.
Yeah, first of all, thanks for having me, Caroline. And I'd say that, look, from a ratings and outlook standpoint, we weren't too worried about what was reported. And the reason we have it at a stable outlook with the BBB rating is this is a company that's demonstrated a pretty strong track record, with market share gains, strong profits, and inventory discipline leading into Q4. So even before the strike, we didn't see this company overproducing. And on top of that, they have a fairly fresh product portfolio with a lot of launches.
card.
The reason that's important is, this industry has been burned because of a lot of overproduction and heavy discounting. GM's been consistently below industry as far as
Sell a couple
incentives
more
are
there.
concerned. And it not only protects margins, but also reduces the volatility in cash flow. And that's one of the lessons the industry has learned over the past 2 or 3 years, to be lean, not to overstock on inventories. And that's helping the story.
Okay, so stable outlook from a ratings perspective, but just in terms of the financial impact of these strikes, obviously they've only been going on for the past 6 weeks or so, so it was more about the outlook and the uncertainty about the outlook than the old numbers at this point. But what impact are we seeing from these strikes, especially now as they hit trucks, which we know are the moneymakers for these big three?
Right, and with the stance that the unions had taken, the 23 earnings impact was expected. We did incorporate a significant deterioration in earnings and liquidity once the strikes were announced. But the reason why we've said it's unlikely to impact creditworthiness is, yes, first of all, the production disruption will
6
cost
minutes.
them. They said today it's
Have to
going to
sell
be
a
an
couple
earnings
to get
loss
it
of about
going.
200 million a week, based
As
on all the
always.
facilities impacted until yesterday. But remember, a lot of that could be made up once production resumes. And we're not assuming any permanent market share losses yet, because we haven't got to a point where customers can't find the vehicle they're looking for. So the bigger question for us is the long-term impact on costs. We've incorporated a certain amount just based on what we think the automakers could come close to as far as concessions are concerned. And that's obviously going to impact margins. But at this point, given the company's significant amount of cash, we think there's adequate buffer for the rating, and that's going to help them navigate this short-term stress.
One thing that really stuck out to me is the fact that GM is abandoning that self-imposed 400,000 EVs by 2024 target. What's the takeaway there? Is this just, are we going to start to see more gas-powered cars for longer?
Yeah, look, I mean, one thing that we've seen automakers do is they're being more sensitive to what demand conditions are telling them, right? So matching EV supply with demand helps them, first of all, maintain strong pricing. And it also, longer term, puts them in a position to take steps to enhance the profitability of these vehicles, gives them more time to optimize their portfolio. And
Two pair.
if you look at the credit story, right, from a cash flow perspective,
Top 2 pairs. Guy just
relative
checks
to
it
the
around.
Germans and Asian automakers, GM was turning out a little weaker because they were scaling up
But
so
sometimes it's good to
aggressively.
be aggressive.
So you put all this together, net,
Keep
this
those
is
other
just
people
a
from
credit
being aggressive.
positive because they are aligning themselves with
They're just
the true
scared they don't
demand
know what you
story,
have the whole
which
time.
looks like there is
Think you're
maybe
just
some
slow playing them all
slowdown
the
on
time
the EV
then?
side given pricing.
All right, Nishit, we have to leave it there, but really appreciate your insights on GM and these automakers. Thanks so much.
Thanks for having me, Caroline.
That's Nishit Madlani, Senior Director of S&P Global Ratings. All right, that's going to do it for the watch list. I'm Caroline Woods. Thanks so much for watching. Stay tuned because Market on Close is next. I'll see you there. Have a good one.
minute. If you get a little rally up to high of day to complete today's range bound chop. Afternoon guts. Getting there.
I'm Oliver Rennick.
Hour. Did it. Just have nice jazz.
PM here in Chicago, and I'm Renita Young. I'm filling in for Oliver Rennick. He's off to Impact. And if you are watching online, I'll be hosting the online portion of Impact as well. But if you're in person, make sure you meet Oliver Rennick there. Now let's take a look at the markets. Right now, it's all green on the screen. The S&P 500 up about 0.7%. The NASDAQ 100 is up by a larger amount. We'll see if it gets close to 1% as we head into the end of the trading day.
Go SPY. I've sold enough contracts now you can rally.
Around the same as the S&P 500. It's up about almost 0.8%. The small cap Russell 2000 also up. If we take a look at these products here, the US dollar index is higher on the day. Gold futures are lower. That checks out. We had kind of a disjointed situation yesterday when they were going in the same direction for some time. Oil futures, however, have plunged more than 2% on the day. And then we're looking at Bitcoin futures, which saw a huge spike in the day. And we're actually going to talk about
Open
that
position
right
the whole
off
meme
top
basket on
to find
Friday.
out, is it euphoria about a possible Bitcoin ETF, or is it just some pent-up demand for the cryptocurrency? But right now, let's kick things off
What
with
kind of positions?
Kevin Hinks. He's our senior equities contributor. He's going to talk about the broad market moves. Kevin, thanks so much for joining us, of course. Tell me, what have you seen in markets that have struck you today?
You know, it's kind of an interesting market because it's
Very slow,
it's
dude.
really a comparison.
It's low volume maybe today.
Renita, you've got strong data coming
Cheers.
out of the U.S. in terms of the PMI numbers that we got this morning, all north of 50. The composite up around 51.
Saw a couple
We
more.
had the turnaround rally yesterday in the markets that continued today. Weak data out of the Eurozone and Germany in terms of their PMI numbers. So strength out of the U.S. The strong U.S. economy continues to chug along, even though some of the expectations for inflation later in the week remain muted. So the strong economic data that's driving a lot of this, even though the risk-off assets, other than the U.S. dollar, you've got crude oil lower, you've got the 10-year yield basically unchanged, you've got the VIX now back to the 19 level. They were 23 yesterday morning. So a bit of a turnaround. Is it fatigue? Is it technical bounce? It's hard to really say, but all things considered, the market's on the verge of a really nice two-day bounce here. Obviously, though, Renita, we're getting into some large cap tech earnings coming up on the horizon, and that could change everything.
And with that, we see that stocks have actually remained, just as you said, relatively higher today. Any other names that you're looking at in particular, aside from those big mega cap tech earnings that are coming after the bell?
Yeah, Verizon's having a
There's
nice
a couple
day today
more.
in today's trading. It's up a lot on frankly, a stock that's been beat up. It's up on some good numbers. It beat on earnings. It made $1.22 versus $1.18. The revenue, the sales, even though they declined 2.6, they beat on expectations. But how about this, Renita? They added 434,000 total broadband net additions. That's a big number. And they added $1 billion to their expectations for free cash flow by the end of the year. That's $18 billion is $1 billion more than they had guided for originally. So yeah, Verizon, I've got the stock here as we reach that 2 o'clock Chicago hour, up about almost 9%, 8.8%.
Yeah, it's a big move on Verizon.
As we get to the end of the day here.
And good news that Verizon was able to bounce off of those lows that it set in not too long ago. For the year.
Nokia, BlackBerry, Rad, Space.
Because I know you were watching that move.
AMC,
Bitcoin today,
GME.
it reached a 17.
Just long on all of them?
Still higher on the day. What do you think this was about? Because
Thousandth day
I
of the
don't know
GME
if
squeeze.
it was about the euphoria around
Tinfoil about today? Of
possible
course there was.
Bitcoin ETF, or if it was just pent-up demand for the crypto.
Selling some more there.
Yeah, I don't either, Renita. Frankly, it looks like remember, whenever you're able to introduce a new product to Bitcoin or cryptocurrencies, the assumption is that adoption will increase and there'll be more demand for the products and there'll be more trades, more reason to make trades, more overall volume. Now, that does not always the case, but at least for the last couple days, 2.5 days here, Bitcoin has had a strong rally, from around 27,000 to where it sits now, 33,880. So yeah, a strong 2.5 day rally here for Bitcoin. What's it about? It could be momentum. It could be that added perception that more eyeballs will be trading. It's hard to say, Renita. It looks like a pretty solid run here, though.
Kevin, before we go, I need to ask you about Meta. There's a huge lawsuit hitting Meta today. Talk to us about it.
Yeah, Meta Platforms being sued by 32 states and the state attorney generals from 32 states and 9 other municipalities are suing Meta on the grounds. Here's the thing. They are responsible for harming young people's mental health. And they think through Facebook and through Instagram, they are purposely addicting young children and teens to their products.
Wow.
And so this group of people, it looks like the head spokesman, even though it was filed in Northern California, it looks like the head spokesperson is Letitia James out of New York. She made some of the comments, but this is basically attorneys generals talking about Meta and filing lawsuit against them. Everything that they said when we were young, you just could have added television in general would have been the same argument. So it's a little interesting, but Meta only down 0.5% today on that news. Not a big mover for
a couple
Meta
more.
Yeah, it doesn't seem to be reacting that much to it, but as we know, this is a developing story, so we're definitely going to continue to watch it. But for now, Kevin,
you left for the homies.
For joining us right
I should leave
here.
for them.
Now, you guys stay right there, and we will be right back as the trading day comes to a close. We'll have a little bit more thoughts on what we expect for those earnings after the day. And then we're going to hear more on what's happening in markets.
exercise and sell covered calls. But you don't have to exercise, you can just sell calls on those calls. And great thing about calls at the money, especially with a lot of time like that, 4 minutes covered call is a wonderful thing. I don't know if that sounds right. I don't know. You mean exercise? Yeah, I mean you don't have to exercise to sell covered calls. You're just making calendar spreads. It's awesome. So you take your leap, you just sell a call, sell a monthly call or a weekly or whatever you want. And if it's in the money at the end and you don't want to close the position, you just roll it up. Roll it up and out to the next week or next month. Nothing. King, maybe. I leave 2 for the homies. Yeah, you can try it, try paper trade if you want, but it's pretty straightforward. Exactly like a cover call. Same thing, but instead of holding shares, you're just holding a long call. Because that long call is the right to 100 shares, right? So it's the same thing as holding 100 shares. You want to sell calls higher strike than your long call. That makes sense. So if you have $1, you bought dollar calls on BlackBerry, you want to sell at least $1.50 or $2 calls. You always want that to be over your strike. order on one of these. Yeah, that works.
Both from their search platform, the ability to expand that and demonstrate high ROIs to their client base, and the investments they're making in AI that will help drive market share
All up in
through
the
the
cloud.
cycle. I think beyond that, I want to focus on their CapEx and their expense plans. Are they going to be elevating expenses to invest in AI to continue to drive their organic growth higher? And will that expense outlay be too significant and worry investors? I don't think it will be. I think they have a lot of room to continue to invest without concerning investors, but I'm focused on that this particular quarter. Longer term, though, I think they have a really unique competitive advantage that's going to drive incredible value creation for investors.
What other areas of the business might you see a potential slowdown?
I think the slowdown that we could see within Alphabet is really around the ad spend. This is the key concern, right? They are a cyclical business in terms of being exposed to advertising, and advertising is notoriously cyclical. As the economy slows, people pull back on their spend. But the reality is, I think they're going to take share through that. I think advertisers are constantly looking for higher and more confident ROIs, and the visibility of your ROI can be very challenging under traditional media. But what Alphabet's doing, what Meta provides, I think you can measure your ROIs with greater certainty. And as a result, when people step back and say, I need to cut my ad spend by 15, 20, 30%, given where we're going within the economy, they're not going to turn to Alphabet. They're not going to turn to their search engine optimization and their search spend. They're going to turn to more traditional, more legacy media that I think will ultimately bear the burden of those ad spending cuts.
Now, similar to Alphabet, I'm sure we could expect to hear more about AI within Microsoft's earnings, yes?
Absolutely. I think everyone wants to know where we are with AI, with Microsoft as well, and certainly they'll talk about that. We think that business has incredibly resilient cash flow streams. As much as people focus on the potentially economic sensitivity of the Alphabet cash flow stream, Microsoft, I think, has an incredibly resilient cash flow stream that will endure any recession that we think might be coming in the near future. Now, they're going to reinvest that back into AI to continue to try and drive share growth over time. We're going to see them invest that in the cloud platform to try to drive market share there as well. But Microsoft, to me, is going to demonstrate that they have a resilient cash flow stream without much cyclicality for us to be fearful of.
All right, we'll have to leave it there.
You're playing
Brian
also?
Van Cronkite,
6-3 off.
Global Investments. Thank you so much for coming on Market on Close. Now, coming up, we'll talk more
Reserve the
about
right to
Alphabet,
Fugazi, yep.
but this time
The
on
Wazy,
the
it's a
trading
woozy, it's fairy
front.
dust.
Our next
It's in the
guest
cloud.
is taking a
That's right, it's in
bullish
the cloud. Okay, I
stance
forgot
on
he said
the
it's in the
stock ahead of
cloud.
Earnings, and he'll tell us
The
why
cloud.
next on Market on Close.
Woozy, it's Wazy. Fairy dust.
I remember
Numbers.
when I first
Doesn't
started
mean anything.
flying, and we would
Go spy. So I just put a limit order. I don't even know what the price would be. Only E-Trade. I know how to look at the option pricing, but I want to know what this contract will be worth when this is here. You can kind of guess because the spreads are so tight with SPY. You could probably guess. I don't know of a way to trigger a sell. That's what I really want. Once the underlying reaches a certain price, I want to trigger a sell in the option. I don't even know if that exists on a brokerage. That would be amazing, actually. Help me so much with my entries and exits. You're just going off of contract pricing, which, no, that doesn't mean anything. There's probably a way to do that, though. could just start trading with the contract pricing. Thought about doing that before. Be this one. The chart. Yeah, just trading it like here. So I mean, if there's 318 back here, it's probably not gonna be that high again. Maybe $3. Put in 3 and see what happens. Oh. Ah, I folded that full house. Yeah. Said call any. Four of a kind? Did I... The second hand round I got quads. I act like I'm bluffing. Did such a small raise. You bluffed, right? Once that last jack came out, he's got to think I don't have it, right? Scared. The SPY is almost back to that price, but yeah, our contracts are just not there yet. That's the thing, because it's hard to do it with theta decay. That's why I want it to be triggered on the stock price, on the underlying. When it's there, trigger the market order. The SPY. The SPY is quite a bit higher. Dude, I'm getting so many good cards, it's insane. It just likes to raise. Just keeps folding. You bluffed, right? Like Groundhog Day. I'll put your little hand in mine. I got you, babe. Like that. Full fidelity layout looks different. Not unusual. Happy for you and GME? Me? I don't actually own any GME. Last price, not the mid. Yeah, you can't just look at the charts necessarily. The liquid stocks or liquid option chains. I need to be sorry. I'm happy I don't own GME. This thing's been dumping since I sold it. Was it? I sold it right here. 23. That was the last time I owned it. I'm gonna be happy about with that chart unless you're shorting it. Let's sell one right here. Got 30 minutes to go. I have one for $3, but we'll probably have to break this high on the stock to hit $3. Those diamonds. Another diamond. Oh my goodness. Nobody has a diamond, really? Not going too heavy with that bet because I feel like one of these guys might. If he doesn't re-raise. Yeah, there it is. Waiting for that. I could have gone smaller. Yeah, ace of diamonds. I think he might be slow playing. I'm a little smaller. Maybe I should try that someday, just trading the contracts. Like just charting the contract. I don't know anyone that does that. I don't see why not. Might give you an earlier entry on stuff. Or no. SPY and dailies, it's probably about the same. Not until the end of the day, actually. Towards the end of the day, I'm sure you'll start to see that decay. On tomorrow's, though, it's probably pretty close. And put your little hand in mine. Yeah, Mullen's up 34. Got you, babe. Back to this. It just seems like low volume, like melty today. And yesterday. It has been lower volume. Compared to those sell-off days. put a trailing stop on that last one for the homies. Put 20 cents. Let's see if that's enough. It's kind of tight. I'm gonna review the trades here. I think I don't know. Today was a little better than yesterday. Yesterday was so choppy. And maybe I just was over trading yesterday. Got me into trouble. I wasn't waiting for the right setup. Today I was doing that for some of it, and then I waited. Low down, I waited. We'll review it. I caught this move. And I caught this move. Let's see. I was in it here, but then I closed out for a little loss. I got back in it. We're right around here. But I went in super heavy here, which made me green on the day. But let's review. Need to wait for the setup and then go big. It's on the trading count. I'm down today. Sucks. But green overall because my backup account. This is over trading. So first trade. Hold on. Okay, so let's see, 950. About 10, 422 puts. These are all dailies. 0 days. Yeah, literally at the bottom. I thought I was making inverse cup and handle. Not so much. Here, about 10. 958 closed him for a loss. That was the first. Look at this. Look where I close these things. Right here. I mean, this is the whipsaw. This is what happens. Textbook. Opened. Puts again. 1004. At least I didn't go for calls right here. I think I did that next time. Oh no, I waited for the low again. 1004 open puts again. 10 of them. 1010. Closed them right here. Yeah. Yeah, if you were listening then, You weren't listening anymore because I muted myself. I just stopped for a while. Yeah, that was really aggravating. 1019. 10 more puts. Right here. 1022, closed them for a loss. Right here. I don't know how I closed that for a loss, actually. What? 19 and 22. The Weeble chart's like a minute off. I think this is showing the end of it. Something. Yep, that was pretty frustrating. 1023. So then I tried to correct my whipsawing and like jumping on a carousel. So I flipped back. I flipped into calls then right away at 1023. 10 calls. Finally, I was in the rhythm a little bit. Sold 2 at 1026. Near the high day, just after. Sold 1 at 1030. These are all profitable. Here. Sold 1 at 1032. Sold 1 at, or sold 6, sold the rest. Oh, I stopped out of the rest. Break even. I'd only sold 4. I was definitely still down the day. That's the thing with trading dailies. If you're trying to close a couple for profit and then put break even on the rest, just it's difficult to do that with dailies. But yeah, stop out of the rest, and then what did I do here? Or no, maybe I had more? Oh, I bought 10 calls, 1050. So literally right at the high day, I top ticked it perfectly for puts. Got 10 calls there. At 1053 I flipped. Sold the calls, bought puts. Right here. So at that point you can imagine emotionally I was pretty drained. Running out of buying power too. But yeah. I actually had a channel up here also that since it raised. So I got those puts. Sold 2 at 1101. Right here, VWAP, that was nice. And then stopped out of the other 8 at 1104. This big bounce. So yeah. Yeah. My entry was better there, would have made everything easier, of course. But I wasn't trying to time the top necessarily, I was trying to catch the break of the channel, which broke it here. Ended up just being early on it because it was the top of the channel was resisting. Yeah, stopped out of those, which sucked. Wait, yeah, stopped. And then, oh yeah, this was my last trade. I had buying power 4, bought a 7 then. That's all I had, 7 puts at 1114. So a break on this channel. This is where yeah, if I was just trying to exhaust this this account, and at this point I'd overtraded, I had whipsawed, but this was the first trade I really maybe should have taken on the day, was a break of this channel, break of this support. This was my favorite setup right here. And by the time I got to there, I'd already whipsawed and was down quite a bit, and I didn't have much buying power left, so I only got 7. But I had done all that crap in the morning. This is where I would have gone big. But at that point I couldn't. I mean, I could have started using my other account also, but just once you're down, you don't want to start climbing into other accounts to lose money over there too. So yeah. Anyways, I would have been prepared to go bigger here if I hadn't done so poorly back here, and actually have buying power for it as well. Anyways, so I got 7 there. Closed the one at 1140. So there, now I'm sitting on them. Yeah, so that's a nice close. I like that. Closed one at 1218. So held through all that. The test on VWAP. Oh yeah, these are the ones. So I want to get better at being able to hold them. I believe in it, and having this entry, it helped, because then there was still a gap fill down there. I thought it would fill. I only sold 1 here, which is crazy. Normally I would have sold more, but I only had 7. I had no more buying power, and I thought we'd gap fill, but probably mostly was that I was just so down on the account. I was trying to make back those gains, which is not a good idea. But it's what I did. I only sold 1. I stuck to it, thinking we'll probably fill that gap, but I wasn't sure. But anyways, I held the rest through all of here. Sold, and then the next one I sold is at 1218. So right here. And if I had timed all of them down here, I probably would have been back to break even. Given that's not a good way to trade, you want to scale. So on that account, the day I'm green because the other account I'll show you. But yeah, 1218, sold 1. This was the trade. This was the only trade to do for me today on that account. There were 2 trades, that one and then this one, which could have really just been this one, but yeah, this one was more confirmed. But that's not a great one, honestly. Yeah, this would have been the one, or this inverse head and shoulders down here, right there. But it's hard when you're down. Just your emotional state is hard to overcome and just reset midday, even though your P&L didn't reset. Let's see, 1218, 1240. I sold 1. So yeah, wait, this was just such a slow meltdown for so long. An hour. This is where it filled the gap almost. No, I started consolidating there. I just sold 1 in case. I was holding these a long time though. These were dailies too, so theta burn and everything. They're in the money though. These were 424s, so in the money. I suppose I could have gotten out of the money. I need to experiment with that more. I usually get at the money just for safety, but if I'm trading for gap fill on a break of this channel, I think it's going to fill the gap here. I could get like 422s or 421s. My percentage gains would probably be quite a bit higher. Just more risky. Yeah, I don't know. Sold one 1253. So right here, that was my best fill. I should have sold a couple there. Didn't. Sold one at, oh, then I had to go to the bathroom so bad. I had to go to the bathroom so bad, like here, and I was like, I'm trying to wait for the gap fill. I was literally trying to wait for this line and this channel. Like, I knew Brett was going to sell quite a bit, and I was like, oh gosh. I sold 1. What time is that? 12:40. Yeah, I sold 1, and then I was like, I have to go to the bathroom. So I went, or no, it was after this one. Yes, 12:53. I wasn't sure if I was going to bounce here or consolidate and then keep flushing, but I only sold 1. And then by the time I got back, I saw it bounce. I just figured it'd probably kind of retest, but it didn't really. This was the only retest. I didn't really get an exit here either. 12:53, sold 1, and then 120. I sold the next one. So yeah, right here. And then sold the last 2 at 128. So it already rallied up here. Yeah. And then I was out on that account. So that account's still down the day, down 6%. All my funds got settled on here. I was waiting on, so. And then I was like, all right, well, still have backup account in case we get another setup. And then I thought potentially for the long side, could have maybe bought here, but would have been a little premature, I think. I like this channel break, even though it was such a sucker. Broke it with all its volatility. I like it's super cool. Oh yeah, we're gonna rip like crazy, and then it just bip and just chops for 2 hours. Tell you what, like there were trade setups, but it was choppy, very choppy. And even the moves are very just melty and liquidity building type moves. But anyways, on the backup account, let's see. So I'm out of all of them now. I got filled in that stop, trailing stop filled. Bought 10. Oh yeah, I started over trading this account too, just a little bit. Bought 10 at 10 calls. Yeah, 10 calls at 129. It's because this chop, man. Right here on that break. Bought 10 there. Actually up on them quite a bit right here, and then just rejected, started consolidating. And so I sold them. I sold 10 at 158. Right here on this low. Yeah, I wanted to hold this support. I just need to give it one more minute, wait for the candle to close or something. Yeah, that one sucked. Not too bad though. Not too bad. I could have held through there. I also wanted to hold this support and then this one, and it ended up holding that. But anyways, took a small loss, and that wasn't bad. But then I was still ready for the calls. I wasn't gonna give up on it. Waiting for it to break out of this dumb consolidation because it was still above this breakout, but I want to build all liquidity. So at 222 right here. The volume started to pick up near VWAP too. I bought 30. And that's what saved the account. Just that little move. That little move. So 30 there, and then fidelity is maybe coming down for a VWAP at the end of day here. All right, bought 30 there, sold 5 at 227, so 30 here, 5 227 at VWAP. These are all profitable. Sold 2 at 231. Of course, the longer I waited, the more profitable they got. 2 more at the top of that channel. Thought about adding on this break. I'm glad I didn't. Looking at it now with all that chop afterwards. Sold 2 more at 233. That was a nice pickup actually right there. 2 more at 237. I'll sell them just in lots of 2, trying to get a nice big average. 245, sold 2 more. Another hit here in case it was a double top. 2 more at 250. 2 more at 253. Two more at 302. Right there, that was a nice sell. 2 more at 303, right next candle. 2 more at 305. Yeah, and then add that bigger candle. 2 more then at 305. Yeah, candle kind of tripped me out a little bit. 2 more at 307. Right here. And I was down to selling them one at a time. So 309, I sold 1. And 325. Sold one, and then my last one I trail stopped, which it sold at 335. So yeah, on this candle right here. Yeah, that was it. Gotta wait for the right setup and then go big. Gotta do it. I don't think anything's blowing up over GME, kitty daddy. Empty Gatorade bottle of the computer, yeah. Yeah, I know, it's kind of crazy. Just need to have like a computer chair. What's up, Psych? You up? Good afternoon. All right, 7 minutes. 1 minute to close. AMC back below VWAPs, up 3%. Spice up as RSI divergence. I think we probably rally. Hesitant to get calls, swing calls though. It's rather wait for the rally and maybe get some at this gap fill, top this channel, start getting some. We break, then wait for 450 or some more 453. This line from. Oh, that's that high. Yeah, I think we're still in a downtrend. That means higher by in English. Spoken in America and other countries as well. That's true. Good afternoon does mean higher by. That's so weird. I don't feel like we have that in English, but we totally do have highs and buys. I guess any of our greetings with a time of day in it be a high or a buy. Uniform. That's good. That's good, Psycho. I appreciate it. Thank you guys for the support today. You bared with it. Bared through it with me. Morning chop. I know I can be annoying. And I'm getting whipsawed that. Yeah. But yeah, I appreciate it. Thanks guys for your support. 21 likes in the day. Well done. Nice little bounce here on GME. Still below the resistance. So I'd like to see it build a shoulder up over here past these channels. Should be in that, I don't know, $15 to $14.50 range. The next couple days, weeks. If we can do something like that, that'd be nice. Nice looking bottom. Little inverse head and shoulders. We do have a divergence here on the RSI that I noticed from back here. So we built one here, right here, and then we did a little rally, but that was really just a bounce on the downtrend. Now we have this one here. So we'll see. It could be winding up. And with the SPY, how the SPY looks, SPY does have a divergence. So we could be seeing a rally on the SPY, which might pull GME up. Not sure. AMC is not looking, I don't know, just consolidating up here, I guess, which is fine. Momentum's still bullish, so that's good. I was hoping it would respond quicker to filling these gaps and that sort of thing, but got earnings coming up in a couple weeks, so probably just waiting on that. But yeah, this bounce so far, this off the lows, is actually really pathetic, given how much it sold off from virtually nothing. I mean, there was dilution, but this is, yeah. So yeah, we'll see what happens with that. Liquor's up today, 18%, no idea why. Mullen's up 35, the chart still looks awful. And yeah, tomorrow we have Wednesday, new home sales at 10 a.m. Thank you guys for the support. I'm gonna cut the stream. Enjoy the rest of your evening. Sub up, like up, comment down. Happy money sticks around. See you on Discord. Thanks, Take You Up. Thanks, Jay from the Bay. Thanks, Guts. Oh, just Guts. You changed your name. Guts. Thanks, Kitty. Thanks, Busy Bee. Or no, it's a different person. Weird. All right, we'll see you guys.